Good morning, everyone. So we have today and tomorrow 2 sessions of strategic management, and we will be dealing with all 5 chapters in brief, but we will be going from strictly examination perspective, right? And to start with, as you know, you must be aware, as you have already gone through the syllabus, you must be aware that we have 5 chapters altogether, and all 5 chapters as per ICAI guidelines goes with uniform weightage. So even if you see a question paper, almost you will find questions going on a uniform weightage from all chapters, but there might be few attempts where you have few chapters going on more weightage. But what I observe is more weightage is seen from chapters 4 and 5. They are more important from your exam perspective and cover core concepts from your SM syllabus. And even when you start your preparation, that's the priority you need to follow for your preparation schedule. Maybe as we go further, I will give you a preparation schedule on how you should be prioritizing your chapters. And each chapter as we go through, we will cover all core concepts in the same priority as from your exam wise importance. Now let's see how your exam weightage goes. We have all 5 chapters, and from our schedule perspective, first I will be starting with first chapter. Why? Because you have all few core concepts to cover, and once we are clear with the basics of your SM syllabus, and then we will be proceeding with fourth chapter, and this will be second in my discussion. And after this, we will take up third, fifth chapter, where we have all core concepts like what are the different types of organizational structures and all, few key structures, and what is strategic uncertainty, and how implementation and evaluation are related, and how formulation and implementation differ with each other. There are few questions which are repeatedly coming in your exam, and we will be covering those key concepts. And then I will go with external environment. This is the fourth. And then third chapter, strategic analysis of internal environment. That will be the last I cover in our schedule. And we will see how much we can cover. As it's a marathon session, we can't be covering each and every concept in depth. We will be going by the key concepts, focusing more on your exam. And as you know, it's a theory paper. So you need to have a particular way of presentation, because with theory, the common complaint what we carry is, despite writing so much, we can't score good marks. In every theory paper, that's a common scenario going for decades, right? So we need to understand how best we can present. And while preparing and while discussing the concept, other than learning the concept, we will also try to focus on what keywords should be used in your presentation and how you should be focusing on what points as you explain this, as you start presenting in your exam. See, ultimately what matters is your presentation skills, and ICAI guidelines, and ICAI loves it when you are going to give your presentation in a tabular format. So wherever you can compare, just adding some value to your presentation, like say for example, from first chapter we have proactive and reactive strategies, right? So if you can, rather than giving us a running theory or like a story, if you put down the same points in a comparison table or a template, ICAI loves such kind of presentation. And that's how you can add more value. And make sure when you are presenting, no one is expecting you to redo or reproduce the entire concept as it is. Speak and write what you understood about the concept, but making sure some key points are not missing. And that's what will be our focus. Other than brushing up the concept briefly, we will also try to focus more on what your focus should be as you present this concept. And we will also see from each chapter what questions have come in the most recent attempts, right? So shall we start the theory part? Now let's start with the title of the first chapter. As you are aware of this, Here we will learn in this particular chapter the basics of strategic management. Despite the fact, though this is the first chapter, you will see how we leave certain concepts as a leftover. Questions have even come in the most recent January attempt from those leftover concepts. So nothing goes as a leftover, nothing stands more important, less important, whatever we consider as miscellaneous part and we ignore the preparation. Questions are coming from that. So let's focus more on from exam perspective, trying to cover as much as possible. So this particular chapter covers on key concepts like what is strategy. As the two terms go here, we are going to focus on the first term, what is management, and we will also focus on learning what is strategy. We will brush up the concept of what all concepts you need to be focusing on when you explain about strategy, and most important concepts what we need to cover from this chapter. Let me give you an overview where you have seen questions in the previous attempts. You will be focusing more on what are the levels of strategic management. And this is one key concept that is covered from this chapter. Other than that, we will be focusing on the elements of strategic management like what is intent, what is strategic vision, what is strategic mission, and what are the goals and objectives, and most importantly, what's about the values and how values compare to other elements from this particular basic elements. Now, let's talk about starting with the key concepts, and I'll explain you later why I'm starting from the basic. You can see one question which has come in the most recent attempt, actually. The most recent attempt, it goes with, can you read the question? From January attempt, write a short note on the concept of strategy. Will anyone expect such basic question to be coming for 5 marks? See, strategy explanation can be done in its free will, right? You can easily cope up on this concept, but it has come for 5 marks. And 5 marks easily go into your pocket. So usually that's more contra to our predictions, right? So, but let's start with the basic concepts, right? So we have two basic terms to understand here, right? And what are the two terms to first start with this chapter? We have the first term to understand. Let's talk about understanding the term management, and then we talk about understanding the basic concepts of a strategy, right? Now, let's talk about what is understanding the concepts of management. Now, I have framed here, let's understand management in 3 perspectives, right? Now, the first perspective is, let's say, management as a key group. The second perspective is, management is described as a set of key functions or processes. The third concept is management as influence. Let's first talk about management as a key group. As I explain the concept, I will be focusing more on the key points you should be using. If the same question appears in your exam, what your focus should be on. Those are the key points, and your explanation can be oriented around those key concepts. Now let's talk about what is management as a key group. Any key tasks in an organization are handled through management, right? Management comes in different levels, right? We have top level managers, we have middle level managers, we have low level managers, but at each level, managers have their own tasks, their own activities, their own responsibilities. We can't say all the managers are the same, but each manager has their own key role to play. Now, when you say management as a key group, means management is responsible to handle all the key affairs in organization. Any key tasks in organization can be handled only through management. And for that purpose, management, we can't carry any person just like that and place them as managers, give them key responsibilities. That's not going to happen. If some person is deployed as a manager at senior level or at top level, definitely managers should have competence. Managers should have been experienced enough to handle those tasks and activities. And is it enough for a manager to have just skills, experience, and just place them, trust them? No, right? So what's more important in every role is character. So management, when they're functioning as a key group, they should handle key affairs, and for that they need to possess good competence, and they also need to have good character. And what is the key capability managers should possess? The key capability managers should have is they should handle very effectively organization's resources. All organization resources, managers must be able to handle very effectively. Now, whenever you come across the word resources, resources can be in the form of some hardware, resources can be in the form of some software organization is using, a resource can be happening in the form of a personnel, resource can be coming viewed in the form of some funds. So any element you use for your task can be considered as a resource. The machinery what we use, the funds we deploy, the HR we deploy, the employees we recruit, they are all resources. So resources, when you talk about resources, resources can be manpower, resources can be facilities, resources can be budget we allocate. So resources even can be the time you are using. So all these resources must be used effectively. So when we use all these resources effectively, what is the outcome we ensure is all organization objectives will be achieved. That's the key point we need to focus on. That is what we describe when we talk about management as a key group. Now, what is the next next feature of management we need to talk about? Management as functions or processes. What do you mean by management as a set of functions or processes? Means managers are usually responsible for handling some key functions or key processes in an organization. Now let's talk about some key functions that are handled by managers. Now, what are the key functions handled by managers? Means, can I say managers are responsible for determining goals and objectives of organization. So, goals and objectives for organization are determined through managers. What objectives organization needs to achieve. And above that, managers are even responsible not only for deciding on the objectives, but they provide all the resources essential to achieve the objectives. So whatever resources are required to achieve the objectives, all the resources are allocated through managers. So managers ultimately, if you have to talk about what are the key interrelated functions they are handling, we can summarize like this. Managers are responsible for organizing. Managers are responsible for planning. They are responsible for allocation of resources. They are responsible for even staffing. What do you mean by staffing? Providing right staff at right time to see that tasks are completed. So planning, staffing, even what you call is providing proper direction, or you can even use the word providing proper guidance to the personnel. And even managers are responsible for controlling the activities. So organizing, planning, controlling, allocation of resources, providing proper guidance. And I would say not ignore mentioning this point. Always managers should believe in encouraging communication with their staff. Without proper communication with staff, managers can never make out how much progress has been seen in performing the tasks. So if they really want to assess what is the progress observed in performing the tasks, what's more important is they need to make sure they are maintaining proper communication. So if we have to consolidate, what key points you would use when you have to write this in your exam? Management as a key function or processes means planning, organizing, allocation, controlling, direction or guidance, and not to be ignored is communication. Its communication is one of the best traits observed from managers, and they have to maintain continuous communication with their staff. Now let's talk about the last one, management as an influence. See, managers have to make sure that whatever they have planned, objectives that have been planned, has to be achieved. So what do you mean by influencing? Influencing means you plan for something as a manager and there is no option of skipping it. It has to be achieved. So whatever, how do we put it down? Things happen as planned. So what do you mean by influencing here? Always what do you mean by influencing means whatever managers have planned for or whatever has been planned, it has to be achieved. And for that, having influence alone is not enough. See, I can say I'm a top level manager, I'm having good position. Will people listen to me? No, right? See, influence undali. It's like if you say influence has to be very, very strict and you intensify the tasks means along with influence. Influence always must be backed. As a manager, they should possess good power. Power gives them authority. Then you tell people to do something, they will follow your rules, they will follow your guidelines, right? So managers must have power. And power alone, because I have some power, I'll tell you, no, you work for 10 hours today, no one will do that, right? So when I'm asking as a manager, my staff to do something, definitely I should be having knowledge. Knowledge and appropriate skills. That is must. And moreover, managers can influence with proper resources. So whatever influence they have, it should be backed by power, knowledge, skills, resources, and obviously sufficient support of funds. So this is how we discuss management as key group, management as influence, and management as functions or processes. So that completes the management part. Now to start this chapter, we have one more word to analyze and which is definitely coming in exam couple of times. We have to learn about the concepts of strategy. It's a vast concept. We'll try to keep it short and we'll try to brush it up with key points only rather than going in detail and depth. But in case if you have any queries or if you want any concept to be discussed more, put it across, we will take it up. Now let's talk about first, what is the meaning of strategy? Now, when you talk about a strategy, there are some points you need to analyze. So first, let's talk about what is the meaning of a strategy. Now, what is a strategy means with a strategy always helps organization to decide on how best they can achieve. So if organization wants to achieve their vision, wants to achieve their mission, if organization wants to achieve their goals and objectives, what they require is a strategy. Without strategy, no organization can achieve their vision, mission, goals and objectives. So can I say indirectly what are we trying to stress here? A strategy always helps in achieving goals and objectives of an organization. So what we are going to circle here? So with the help of a strategy, an organization can always achieve their goals and objectives in an effective manner. And the next point is, see, or when you talk about organization always has dependency on external environment. However, external environment is changing, organization has to adapt to those changes. So if any organization is not adapting to the changes in the external environment, we know that organization's existence becomes a question mark. They lose their existence, they lose their credibility, they lose their edge in the competition. So every organization, it's must, they should have adaptability to whatever changes are happening in the external environment. So how organization must respond to external changes. So any change happening in the external environment, how organization responds to external changes can be decided with the help of strategy. So a strategy is must to adapt to the external. So can I write, put within the brackets? A strategy helps organization always to adapt to external environment. With the help of strategy, an organization can achieve its vision, mission, and goals and objectives, and have proper methods to achieve them. That's nothing but a strategy. Now, the next key point, what we need to remember when we are talking about a strategy always, let's talk about its proper definition. Now, how a strategy can be defined. The key word you use here is a strategy is nothing but a long range blueprint. How organization has to move forward, right? How organizations in which to adopt to a particular future direction. And that is how we basically define a strategy. And we have covered the first concept of strategy. So rather than, I will show you how the answer is given in suggested. But we cannot write so much like this, right? This is pulled from your suggested. It's a 5 marks question in the January attempt. And that happens to be the last question in the question paper, I think, if I'm not wrong. And we can't put a story like this, right? So rather than putting a story like that, what we have done here, arranged into grouped into proper side headings. That is it. The next concept we will cover is purpose of a strategy. Mark it up. It's important for your exam. So let's talk about purpose of a strategy. Now we'll go to a clean space and put down the points here so that we do not get confused with the other content. So let's talk about the purpose of a strategy. When you are talking about the purpose of a strategy, the first point always you need to put down. A strategy, see, is it enough if I just understand as an organization what goals to achieve, or I should be also clear with how to achieve them, right? Point is clear? Makes sense? See, what goals? And I should also be clear with how to achieve them, right? So what goals and how to achieve them? The purpose of a strategy is to properly link or map. So a strategy helps in mapping what goals to achieve and how to achieve them. And the second one, when you are explaining the purpose of a strategy can be described as a game plan. Make sure you put down this word. It adds a lot of value to your presentation. So you are explaining however you want, but mapped. I'm giving the key concept here. Now, when you talk about strategy as a game plan, how do you describe strategy as a game plan means? Now, a strategy gives organization capability to compete in the environment. See, there are so many competitors in the market. So you have to compete successfully in the market. How an organization can compete successfully in the market? The prime concern should be customer. If any organization goes successful in satisfying their customers, attracting new customers, satisfying existing customers, and they go successful in providing good customer satisfaction, definitely organization can compete successfully in the market and they can improve their market position. They can increase their market share. So a strategy works like a game plan for organization in competing successfully. So it provides organizations capability where they can compete successfully in the market and they can provide good customer satisfaction and they can improve their market position. So not only improving their market position, they can also increase their market share. Why they are able to increase their market share? Because they are attracting new customers. So that is how we describe one of the purposes of a strategy. A strategy serves like a game plan for organization where it provides capability to the organization to compete successfully, satisfy customers, and also provide organizations ability to improve their market position and to increase their market share. We are not deviating from your ICAI material version. So whatever I am putting down should be found in your material, but I am focusing more on the key points, right? So hope. And let's talk about the third one, which is a key point. You will not ignore writing this when you are explaining the concept of a strategy. A strategy, a clearly crafted strategy. If any organization is implementing that, their complexities are minimized in achieving their objectives and they can minimize uncertainty. I hope you understand uncertainty and we will learn more about uncertainty in 5th chapter tomorrow. That's one of your key concepts, by the way. So let's talk about one more purpose of strategy. Strategy helps to minimize. What is minimized through a strategy? Strategy helps to minimize uncertainty and strategy helps to minimize complexity. So this is how we describe the purpose of a strategy. So overall, the concept has been consolidated into 3 points here. Strategy's purpose, 3 points are given. It helps in mapping what goals to achieve and how to achieve. It works as a game plan for the organization and it helps to minimize odds like uncertainty and complexity in achieving goals and objectives. So with that we are done with purpose. Now let's talk about unified direction. Now what do you mean by unified direction? First get to that understanding that concept. Now objectives of an organization are to be focused by each and every employee working at every level of the organization, isn't it? See, as an employee, suppose let's say I'm working for IT department. I can have my own individual objectives, but at the end, I should contribute to the organization's major objectives. Irrespective of from which department you are from, what's your role, what's your designation, doesn't matter. But every employee should contribute to achieve the organization's main objectives. So what do you mean by unified direction? Unified direction means strategy helps to achieve major objectives. And it's not from one, it should be unified action. That means what? What do you mean by unified action? Every employee must contribute from every level. From every level, employees must contribute to in achieving organization's major objectives. And this is not something we focus for a short term. It should be for a long term. So it should be a long term approach. Now, so what side headings we have covered here? We covered the meaning, definition of strategy. There are some definitions given by Ansoff and all, which I am not going by. I think you can brush it up once. Unified direction. And now we are proceeding further, understanding what is the nature of strategy. Under nature of strategy, I again formulated 3 points here. What is the first one? Nature strategy works like corporate scheme and direction. Strategy works like a framework for management. Strategy decides the role of management. I marked important aspects here, which have come in your exam already and which are maybe important for further attempt as well. So let's talk about how strategy describes corporate scheme and direction. So when you talk about strategy, working as corporate scheme and direction, how do you put it across? Strategy helps to handle. See, in an organization, there are some positive elements and there are some negative elements, right? There are some positive aspects, there are some negative aspects. Now, what is the positive aspect an organization must focus on always is opportunities. And what are the negative aspects organization should focus on? Their weaknesses, right? Their problems, their challenges, the threats they are facing from external environment. Now, can I say competitor is also a threat? Unpredictable changes that happen in the political platform is a threat. Competitors are a threat, right? So there are various threats an organization faces. So there are some negative aspects strategy. So strategy always helps to handle certain positive elements and certain negative elements. And I can even give some unanticipated events. So if any organization has a well-crafted strategy, opportunities can be well utilized. What is an opportunity? It's a scope for organization to grow further. Yes or no? An opportunity has to be properly utilized. Then only an organization can grow. And all weaknesses, problems, challenges, threats, unanticipated events that may happen are effectively handled. So that's how we explain strategy as a corporate scheme and direction. Let's talk about the next one, framework for management. I give you one key point later in a box. Make sure you also make a note of it. But first, let's complete framework for management. A strategy works as a framework for management. What is this framework concept here? When an organization has well-developed strategies, it provides a framework. Now, this framework includes 4 elements which we know. It's what framework? Strengths, weaknesses, we have opportunities, and we also have threats. Strengths have to be always enhanced, right? They have to be built further. Weaknesses have to be handled effectively, minimized. Opportunities have to be exploited. That's the right word we have to be using. Threats have to be minimized and addressed. So a strategy provides a good framework for managers where they are capable to handle strengths, weaknesses, opportunities and threats. The last one goes very important. What is the role of management in making strategies? Now my question is, can a strategy go perfect all the time? then what would you say? Can we make strategy as a manager always a strategy which is completely perfect, optimal, flawless? No, right? Answer is definitely no. So strategy can never be perfect, flawless or optimal. Why? I may make a very sound strategy, but still I may find at the end it has not suit my requirements. It's against my plan. It's not that my capabilities are weak, but external environment is unpredictable, right? So there are so many changes happening, which are so many unanticipated events. So what is the reason why, what managers should do? Managers, shall I go with the third one here? I'm changing the color so that you can distinguish. So let's talk about the role of management. When managers are making strategies, first of all, managers always should make what type of strategies? Not weak strategies, make sound strategies. And when do you say a strategy is sound? That's what I was talking about. Make sure you recollect this for your entire syllabus. Whatever strategies are made, a strategy must be always aligned with vision of the organization and goals of the organization. It's very, very important. Then only the strategy is considered to be a sound strategy. So make sure the strategies are aligned with vision and goals. But as we said, how much ever sound strategies are made can't be perfect all the time. A strategy can't be flawless all the time. So what a manager has to do here? Here comes the role of managers. So a manager always should make strategies. A strategy should always have a scope for unanticipated changes. And in a strategy, there should be always a scope left for mistakes. And to these mistakes, I should be able to provide some correction. So there should be a scope left in every strategy. So managers, whatever strategies they are making, so they should make strategies where there is always a scope for some unanticipated changes. And whatever scopes, so believe that strategy will have some mistakes, and believe the fact that however good strategy you are making, it has to be corrected. So leave always scope for corrections. Are we clear with this? So how did we consolidate the concept? So we have covered meaning, purpose, unified direction. Key point is achieving major goals through unified actions. Nature of strategy. We have covered corporate scheme and direction, framework, and what's the role of managers. Shall we go further? We are going with more key concepts for your exam. So what flowchart I made here? So can you observe here? What is the next flowchart? It talks about, what's the title I have given here? We are learning about more information about a strategy. So let's talk about more information about a strategy. Under that, which is very important one for your exam, levels of strategies. As you can see here, strategies are not made for one level. Let's understand that fact. We know it for the fact that strategies are required at each and every level. The topmost level is the corporate level. Divisional level also referred as business level, and functional level, which is the low level of the organization. Right. And then we have to talk about types of strategies which has been regularly been coming in your exam. Proactive and reactive strategies. And then we talk about how do we craft a strategy and how strategies evolve. Mostly you as student ignore this concept as it goes somewhere sandwiched in between your material and you don't bother reading about it, but I would insist go through that. You don't have to go give in-depth reading, but have a brush up on this, have an idea on what this concept speaks about. And then finally, we talk about importance of strategy, which we already covered. So here we will focus on three aspects. I'm going to focus on three aspects: levels of strategies, types of strategies, and how strategies should evolve and crafted. Now let's talk about first, which is the most important concept, types of strategies. We have two types of strategies, proactive and reactive. Now let's understand the prime difference between proactive and reactive strategies. What you should understand when you are explaining proactive strategies. Proactive strategies are always planned lot in advance. They are deliberate activities. Deliberate word itself tells you that I know what I'm doing and I have planned for it lot in advance. So they don't wait for the damage to happen. They don't wait for the risk to occur, for the problem to occur and then react. No, they make sure that problems do not happen. They try to predict, anticipate in advance what changes may happen and craft strategies accordingly. And that is why proactive strategies are always deliberate. They are planned in advance. And they are basically considered as a preventive mechanism. They are, so before the impact only I am going to implement the proactive strategies. And on the other hand, if you have to talk about reactive strategies, when it comes to reactive strategies are situational. Now, what do you mean by situational? However, your environment is changing, you observe the change and adjust your strategies accordingly. So, it's basically situational and it doesn't follow a planned approach, it follows an adaptive approach. Now, what do you mean by adaptive approach? You are adjusting your strategies according to the environmental changes. However, environment is changing. According to the environmental changes, you are going on updating and modifying your strategies. That's how we talk about reactive approach. This just doesn't end. Writing this much in exam is not suffice. So you need to write more. That's how your material describes and stops there. But they expect you write more because you know more. So let's talk about more details on proactive and reactive strategies, right? Now, if you have to talk about more details on proactive and reactive strategies, I'll keep asking you a few questions. You try to answer. Now, I wrote here one word that proactive strategy serves as a preventive mechanism, whereas reactive strategies are not preventive, they are corrective mechanism, right? Where the risk factor is high, in proactive or in reactive? Reactive, right? See, why? Because I will implement proactive strategies before the risk happens. See, proactive strategies are always implemented before the risk, whereas reactive strategies are implemented after the risk. So that itself tells you where the control is good. Proactive. In proactive strategy, I have stronger control mechanism. We are not saying that reactive strategies, control is not there, but control is limited in reactive strategies. Now let's analyze how much you understood the concept. Where the cost factor is high. In reactive strategy, emergency costs are high. Why? Because you are responding according to the situational changes. But in proactive strategy, the long-term costs are greatly reduced. Right? Are we good? Now, let's say, for example, now, as you know, irrespective of the profession you come from, your academic background, everyone is talking about, everyone is using AI, and you also use AI, you also use blockchain. Suppose if a company has predicted 5 years back that AI is going to sweep the world, and many people may let's go with AI and survive in the environment. And they made sufficient changes 3 years before AI has really taken over the world. Then can I say it's a proactive strategy? But suppose if you stand on the other hand as an organization, now AI is getting into boom, so let's start adopting AI technology now because environment is going behind AI. Then it becomes reactive strategy. Yes or no? We are not saying an organization should always strictly go only by proactive strategy, or organization should strictly go only by reactive strategy. The point here is your strategy must be a blend of both proactive and reactive approach. You need a preventive mechanism and you also need corrective mechanism. Let me tell you why. Let's say you made a very good proactive strategy, but will strategy, okay, that strategy has worked good for you now, but are you sure next 1 month the same strategy will work for you? In next 6 months the same strategy will work for you? No, I have gone for proactive approach. No, this strategy should work for long term. No, environment is quite complicated. External environment is quite turbulent. Dynamic changes keep happening. So how much ever you are making proactive strategies, they are not static. You have to keep making some changes, right? So we also need some corrections. So how a strategy must be crafted. That's what I'm talking about. So let's talk about how to craft a strategy. First, whenever a strategy is crafted, you are going to consider your past decisions and your past actions. And you are sure they've really worked well for you at that point of time. 2 years back, I made a strategy and it has hit on the spot and it has given me good profits. So it worked well. That strategy has worked well. That decision, excuse me, the decision has worked well. So you are going to focus on past decisions and past actions that have really worked well. And can you make a strategy only based something worked for you 2 years back, but not sure it will work out for you now? So you should also consider your current decisions and current actions. Combining these two, strategy would be crafted, right? Now, when you craft a strategy, your first approach should be come up with a proactive strategy. And this proactive strategy, you are going to make some ongoing adjustments. You are going to adjust and adjust ongoing. Ongoing word itself tells you that it's going to be a continuous process, ongoing process. So you are going to go on making some adjustments or changes according to the environmental changes, external environment changes. Why this is done? Because you want adaptability to your external environment. And here, this goes your reactive approach. So this is how, focusing on these points, you will orient your presentation, how strategies evolve and how strategies are crafted, right? So you are going to make a strategy a blend. So finally, you can conclude a strategy must be a blend of both proactive and as well as reactive. But first you make a proactive strategy and go on making ongoing adjustments to your proactive strategy according to the environmental changes. That's the best approach. All right. So now, as this concept is really a key concept for your exam, I want you to focus more on these points of comparison for proactive and reactive strategy. Let's try to answer these points. Proactive is going to anticipate future changes. Reactive responds to the change. Proactive focus, what is the focus of a proactive approach? Prevention. Whereas reactive approach focuses on corrective mechanism. Timing and risk handling, you can read both together. Proactive strategies are implemented before impact. Reactive strategies are implemented after. So before risks, you are going to implement proactive strategies. After the risk happens, to reduce the impact of the risk, you are going to implement reactive strategies. So risks handled after occurrence. All right. Now let's talk about approach. What is the approach of a proactive strategy? It's planned. But as I use the word, reactive strategies are completely situational. So I use the most appropriate word, ad hoc. Ad hoc means however your environment is changing, accordingly you adjust your strategies. Let's talk about the cost. Cost factor, how is it going? It lowers long-term costs, but emergency costs are high. Which is more innovative approach? Proactive is definitely more innovative. Where do you have greater control? We discussed this point already. Proactive. In reactive approach, do not interpret the fact as control is diluted. It's limited control. Control will be there everywhere, but it's limited. Outcome. Long-term advantage, but reactive helps in short-term survival. You are surviving the situation. That's all. So that's how we talk about proactive and reactive approaches of strategy. Give a good brush up on this. It helps you to analyze. You may focus on these aspects as you compare. And I'm telling you time and again, whenever you have a comparison template like this, please do in a tabular format. Your valuer would love such kind of presentation. Every time you don't have to give lengthy points. You are giving the right points which are quite crisp and which are quite meaningful and what they actually expect. Are we good with this? Can we move further? So, in additional details of strategies, we have covered what are the types of strategies. We have covered these two, how strategies must be crafted. Now, let's talk about the levels of strategy more in detail. I would take you through to the next concepts of this chapter, where we discuss this more in detail. Yes, here comes the verse. Can you just give a brief overview on the flowchart we made here? We are talking about strategic levels. What are the three levels covered here? Levels of management. We have corporate level, we have business level, we have functional level. All right. So now, whenever you are talking about these three levels, the first we will be talking about multi-divisional structure and all more in depth in 5th chapter. But for the time being, I'll have to brief you on multi-divisional structure. Do you happen to remember any concepts of multi-divisional structure? Three levels again, right? Corporate level, business level, functional level. Now let's put down some brief points here about multi-divisional structure. In a multi-divisional structure, first let's put down one thing. It suits only large organizations. Now, what does a large organization do for effective strategic management? They are going to divide this large organization into proper divisions, right? I will discuss this tomorrow again in depth under multi-divisional structure. I will be discovering few structures tomorrow. We will discuss there. But right now, it's only a briefing to the extent what's necessary here. Now, divisions can be made on the basis of products. Divisions can be made on the basis of customers. Divisions can be made on the basis of geographical location. Like this, we can make divisions. Now, when you make these divisions, what you need to understand is these divisions operate independently. They have independent operation. Each division operates like a separate business. And such divisions are also referred as SBUs, strategic business units. Wonderful. And each division will be headed by a divisional manager, or you can also call them as business managers. That's up to you. But the appropriate word would be divisional manager. When I mean to say divisions are independent, perhaps the most appropriate terminology would be each division is considered to be autonomous, or it can be semi-autonomous. Now let's broadly talk about the levels we have in such multi-divisional structure. Now in multi-divisional structure, I have a quick diagram to talk about, to show you so that we can observe clearly what are the levels in multi-divisional structure. We have first corporate headquarters, which is nothing but our corporate level. Next, we have divisions. Division A, Division B, Division C. This falls under divisional level. Under each division, you have functions. Each division will have individual functions, right? Now, production, marketing, and finance. You can see the same three functions going for each division. Each function will be headed by a functional manager. Are we clear? Let's first talk about corporate level. At corporate level, can you tell me who will be present at the corporate level? Means we have senior level managers. Best examples could be CEO, CFO, presidents, board of directors, right? Directors. So these are all few people who work at corporate level. Now let's talk about what activities are taken up at corporate level. This is more important. What is done at corporate level means at corporate level, when it comes to strategies get planned at corporate level. Strategies formulation is done at corporate level. And most importantly, for various strategic objectives are developed at corporate level. So, strategy formulation, strategy planning, strategic objectives all get crafted at the corporate level. And next important, responsibility of the corporate level managers, they are responsible for decision making. And they are going to oversee all divisions. All divisions and their performance. So they are responsible for overseeing the performance of all divisions, and they make strategies, overall strategies for all divisions. Now let me ask you one simple question. At corporate level, will the corporate level managers make detailed strategies for each division? Is that their responsibility? No. Right? At corporate level, they are not going to make detailed strategies for each division. That becomes the responsibility of whom? Divisional manager. So, divisional managers, now as we are done here, so can I add few more details, though it goes out of the box under this scenario, but let's put down. At corporate level, they are going to develop vision and they are also going to develop mission. And they are going to decide on objectives. That's what you can conclude on an overall basis. Now let's talk about the second level, what we have here, divisional level. At divisional level, what do you observe? Independent divisions. What did we mention the facts of divisions? Just now we wrote, no. Each division is autonomous or semi-autonomous. Each division operates as a separate business. Each division is headed by a divisional manager. Now let's talk about the activities handled at divisional level. Now at divisional level, we have who are working there? Divisional managers. And the responsibilities of divisional managers is they are going to craft detailed strategies for each division, whatever they are responsible for. Now, suppose you are a divisional manager responsible for the operations of division A. You will make strategies for division A. And how these strategies are going to be? Very detailed strategies. And moreover, at divisional level, the divisional managers, what is their core responsibility? Whatever mission is developed at the top level, which is the corporate level, that is converted into sound strategies by divisional managers. And divisional managers are responsible for the growth and performance of each division. Whatever division comes under their control, their vicinity, they are responsible for growth, profits, and performance of their division. They have to overlook that. And they make sure that division, their respective division, always exhibits efficient performance. That's the key topic we need to key points we need to mention here. Are we good? Now comes next is the bottommost level, functional level. Who are found to be working there? Functional managers. Mark it up. It's important for your exam. You will have to talk about what are the responsibilities of a functional level manager. Each function. Now, first of all, now let's say I am a functional manager of finance. Will I take care of marketing? No, right? So, what is the first point you need to mention is functional managers will be held responsible only for one functional unit. They are not overseeing all functional units or all departments. They are responsible only for one functional unit. Are we good? And next, what is their core responsibility? Their core responsibility is to make sure they are implementing the strategies. Successful implementation of strategies is done by functional manager. That is their core responsibility. And if you have to talk about the corporate level managers, divisional level managers, and functional level managers who are more close to customers, functional level managers. So you have to mention the point. It is the functional level managers who are very close to customers. Because they are close to customers and because they are responsible for implementation of strategies, they are fit enough to give all the feedback and they provide a good strategic insight, and most importantly, they are also going to provide they are going to make some recommendations. Don't you think they are fit enough to make recommendations on what adjustments are necessary in a strategy? Would make a strategy better? Where adjustments would be required and what type of adjustments would be necessary, they can recommend. They don't have right to decide, but they only make their recommendations. Always, now tell me, to whom they will report? Functional managers, whom will they report? They are giving feedback, insight. Who are they reporting to? Functional managers will report to divisional managers and divisional managers will report to corporate level managers. Can I say this multi-divisional structure has a very clear hierarchy with clearly described roles and responsibilities. And it suits large organizations. Can I take you through one small simple example? Now we are talking about Tata Group, which is the best example to give for a multi-divisional structure. We have Tata Steel, Tata Motors, and Tata Consultancy Services, which is into IT, right? Now, under each division, we have functions listed. What are the functions we have? Production, marketing, finance, HR. Here we have development, client management, finance, HR, and training. There could be some common functions, there could be different functions, depends on the nature and functionality of the division. Now, I want you to go through these things. Corporate headquarters. Corporate headquarters are responsible for crafting. I want to take you through keywords. Vision, mission, capital allocation, provide all the guidance and governance, and they are responsible for monitoring. Are they managing daily operations? No. Now, we can see 3 divisions coming under corporate headquarters. Each division operates like a separate company. I use the words autonomous or semi-autonomous. Full control over the operations of that particular division. It is responsible for its own profits and losses. Are you able to relate? Now let's talk about functional departments. For functional departments, what we have mentioned here, production, marketing, sales, HR, finance, like this we can give so many functions under each division. Now, what are the key points you need to mention here? Can I take you through? Let's get back to the flow chart here. Levels of management in multi-divisional structure. Under corporate level, we have discussed about SBU. We also spoke about role of corporate management. Can you quickly give me any 5 key points here? Role of corporate managers, what are their responsibilities? Vision, mission, planning, decision making, formulation of strategies. Are they going to make detailed strategies for each division? No, it's not their cup of coffee. Next, let's talk about the role of business level managers. Quickly, let's brush up. Quick. Business level managers, they are responsible for overseeing each division. They are responsible for growth, profits and performance of each division, and they will convert the mission into some strategies. They make detailed strategies for each and every division, which is under their control. And these are the responsibilities of divisional level managers. They report to corporate headquarters. Last, functional level. Role of functional level managers. Can we talk about that? Yes. Implementation, not to be ignored. Yes. And moreover, functional managers will report. They are responsible only for overseeing the activities of one functional unit. Implement and provide the feedback, insight and recommendations on what adjustments may be beneficial to the strategy to the next reporting authority, divisional managers. So that's how we conclude this concept as corporate levels. Now we have, this is very important for your exam. You can expect good case scenarios on this. Approaches of decision making. We have 2 basic approaches of decision making. One is top-down approach and the other one is bottom-up approach. The prime difference between top-down and bottom-up approaches, see, top-down approach provides a clear hierarchy. All the key decisions will be taken by top level, converted into easy to implement strategies by divisional level managers, implemented by functional level managers. There is a clear hierarchy and clear segregation of roles and responsibilities. And in top-down approach, we clearly distinguish the activities of corporate level, business level, and the functional level. This is how the hierarchy goes on. Are we good? Now, bottom-up approach does not give such clear hierarchy. It is basically ensuring, see, top-down approach is not outdated, but it's a very old school of thought. It's still followed, but it's an old school of thought. See, considering the fact all the key decisions are taken at which level? Corporate level. Key planning is done at which level? Top level. Strategies are developed by whom? Corporate level. Implemented by operational level. Who are close to customers? Operational level. Don't you think there is a huge gap between the functionalities of corporate level and functional level managers? Strategies are made by those who are not close to customers, who are not close to the environment, implemented by those who are close to the environment. But what is the necessary requirement here is Bottom-up approach is a updated thought process. So why are we not allowing each level managers to participate when key decisions are taken? Nevertheless, the fact remains still all key decisions will be taken by corporate level managers. But when corporate level managers are formulating key strategies, or they are developing any key plans, or they are taking any key decisions, from all levels, managers are allowed to participate. Then they can express their views. So they are going to finalize any decision only after consulting managers at all levels. This participation from all levels is nothing but bottom-up approach. So we say bottom-up approach is like having a culture of teamwork, or it is a collaborative approach. Are we good with this? So this covers the levels of strategies. And to conclude this concept, I would like to mention one thing. Under what kind of situations such multi-divisional structure of having 3 levels of decision making and strategy formulation would be useful? Whenever organizations are looking for flexibility. Flexibility means you can change according to your will and wish, supportive of changes. And whenever organizations are demanding a faster decision making, and organization is very large size organization, and it has entered into multi businesses. Under these kind of situations, organizations can go for a multi-divisional structure. That could be your conclusive summary for this. So we have covered the levels of strategies. And to conclude this chapter, we will be covering intent, vision, mission, goals and objectives. I would be focusing more on intent, vision, goals and objectives. Okay. Would you like to go for a quick break and come back? So as we are done with the concept of strategy, we are done with the concepts of management. We learned types of strategies and levels of strategies in detail. Now we talk about the next aspect, which is strategic management. I will not be discussing all the concepts of strategic management, but there are some concepts which go important for your exam, which is process elements of strategic management, and then limitations of strategic management, benefits. But first, let's talk about having a quick overview of what is strategic management. I'll give you all the cluster of points at once where you will get the process elements also. So let's first talk about when a strategy can be formulated. No strategy can be drafted without environmental scanning. So what stands must is environmental scanning. Without scanning external and internal environment both together, no strategies should be developed. So the first basic step that is required for strategic management is environmental scanning. So let's talk about in what ways strategic management helps and how. So I'll give you the logical flow. So how strategic management goes. First, any organization first have to come up with their vision. We will discuss these in detail in a couple of minutes. Vision gets translated into mission. Mission gets translated into goals and objectives, right? And once this is all done, organization has to go for proper environmental scanning. Environment can be of two types, external environment and internal environment. And once environmental scanning is done, then organizations can go for proper strategic formulation. But when they formulate strategies, if you learn like this with proper logical flow, your learning becomes easy and revisions also go easy. So when strategies are formulated, what makes sense is you just don't go with one strategy and finalize that one strategy and say, yeah, my strategy is good, really doing good. That's not the chain we follow. So that's not the approach we have. So when strategies are formulated, what they do is they go with formulating lot of strategic alternatives. And all these strategic alternatives have to be analyzed. Why all the alternatives will be analyzed? So that they can find a best alternative. And once this best alternative is chosen, this strategic alternative can go for implementation. And with implementation, the task is not over. Once you have implemented one best choice you made, to what extent the objectives are achieved, how efficiently objectives are achieved, did the strategy meet its purpose or no? It has to be assessed, and that is done through evaluation. Evaluation is basically to analyze. Let's summarize this way. To what extent strategy meets its objectives? Does the strategy help organization in meeting its objectives? Does strategy suit organization's culture? Does strategy suit organization structure? See, in all this, I'm going to put down here, which is very important. Whatever strategy you are making or alternative you are choosing, we have to ensure proper fit with organizations. Every strategy should fit with organization's structure. Strategy should fit within the organization's culture. Strategy should align with organization's objectives. This is key concept we have to keep in mind before choosing any alternative. Now, from this flow, let's pick what are the process elements of strategic management. The first process element could be your vision, mission, goals and objectives. The second process element would be environmental scanning. And then the third process element is formulation. The next process element is implementation. And finally, evaluation. These are the process elements of a strategy. Mark it up. This can be your exam question. So I have given you in detail the logical process flow of strategic management, and we also discussed the process elements of strategic management. Are we good with this? Simple, no? Simple. So just quickly to brush up, because can't be ignored. These are coming in your exam. So let's talk about the importance of strategic management. The importance of strategic management. This is, I marked with 3 stars. You can make it out. Now, strategic management done. See, as long as organization exists, strategies are must. Whenever you are making strategies, strategies have to be well managed. So strategic management is not going to be a one-time process. Strategic management is always discussed as an ongoing, continuous process. It's a cyclic process. It has to keep. Suppose after evaluation I make out the strategy didn't help in meeting objectives. It's not working as planned. So then I have to definitely make adjustments or corrections, right? So though I haven't given here, After evaluation, can you tell me what should be the continuous flow? After evaluation, we can make necessary corrections or adjustments in your strategy accordingly. Now let's talk about the importance of such strategic management. As it has to be a continuous process, any organization having a methodical strategic management, they exhibit superior performance. Superior performance when compared to competitors, superior performance when compared to their own past performance, and superior performance compared to their even current performance. And such superior performance is going to guarantee superior returns. Who all are expecting returns? Returns should be given to shareholders, suppliers, everyone. Can I use the word stakeholder here? Whoever is associated expects good returns. You may be a customer, you may be an investor, investors, customers, suppliers, partners, whoever it may be, whoever is associated with the organizations and their strategies, everyone expects returns. So because of proper strategic management, why strategic management is so mandatory? Because organizations can exhibit superior performance when compared to their competitors, their own past performance, their own current performance, which guarantees superior returns to all stakeholders. Now comes the next concept. I'll quickly take you through with this. Objectives. Strategic management, when you are explaining, make sure you use this word. Strategic management comes with twofold objectives. What are those twofold objectives? One is, through proper strategic management, organizations, just now you wrote superior performance. So can I say, as an organization, when you are exhibiting superior performance when compared to your competitors, that means what? You have gained a competitive edge. So it provides competitive advantage to the organization. And other objective is, organizations can work in a very flexible manner. What do you mean by flexible here? Adapt to all environmental changes. Now, I would like to introduce two more words here. So now, can I say, when any organization adapts to environmental changes, go on adjusting according to whatever changes are happening in the environment, can I say this guarantees longevity and this guarantees sustainability? Why longevity and sustainability are guaranteed? Because they are adapting to all environmental changes. As they can remain updated, right? They are remaining updated with all changes. So that means they have longevity, and as well as their strategies are more sustainable. So whatever competitive advantage we are mentioning here, this competitive advantage can't be for a short span of time. It's not enough you are a leader in the market for next 1 week or 2 weeks, right? So they need to have that market position for a long time and sustainable position. So that longevity and sustainability come through proper strategic management. Are we good with objectives here? Now, let's talk process elements. I've covered. It's important for your exam. I've marked it up already. So make sure you also go through them before your exam. Let's talk about benefits of strategic management quickly. I'll not be giving much time. Because most of the benefits go self-explanatory here. Now, with proper strategic management, the first benefit is organizations can have a clear future direction. Which path to follow, what they have to do. So what they should be their future objectives, clear future direction. and clarity in goals. And the strategic management ensures that all goals are properly aligned with organization objectives. This is one more benefit we can list down for strategic management. So strategic management provides a clear future direction to the organization and ensure that all the goals are aligned with organization's objectives. And the next one is proactive orientation. I think you must have gauged it by now. Strategic management ensures that many strategies are mostly proactive rather than always being reactive. See, you are reactive means you are just, see, I'll give you one small example. You know, as you are on internet at any point of time, we may get hacked, right? Our credentials might get hacked. So what is the point in knowing after the event, yes, my password has been hacked? What do you get it? You are just being a spectator, right? That's what your material also says. Don't just be a spectator, make your strategies proactive rather than being reactive. Because you are opting for reactive strategies, you are being a spectator. You are allowing the damage to happen, loss to happen. Let's talk about the next benefit, framework for major decisions. Now, what do you mean by framework here? Any major decisions taken depend on strengths, weaknesses, opportunities, and threats. So, strategic management provides complete information about organization strengths and weaknesses, opportunities and threats, based on which major decisions can be taken. Now, before taking any decision or making any strategy, what did we say? Environmental scan is must. And we know that environmental comes in two types, external and internal. When internal environment is analyzed, organization will get to know about their strengths and weaknesses. When external environment is analyzed, organization will get to know in what are the opportunities and threats. Use this integrated framework to take major decisions. Now, what do you mean by future preparedness? You are ready for taking any unanticipated event. You are ready to take any unanticipated, unpredictable environmental change. And you are anticipating what are the opportunities you have in the environment. You are able to find opportunities. When you find opportunities, you can use them, exploit them, and take it as a chance to grow further. Let's talk about the next one, defense against mistakes. So, strategic management provides a strong defense mechanism where you don't take small mistakes or any pitfalls, not only mistakes, even pitfalls. Any wrong action, any wrong decision, wrong investment, your damage can be reduced. So it provides a good defense mechanism against mistakes. Can anyone tell me if I have to elaborate this more? I have to elaborate this more. How do I enhance this defense mechanism? How do I make sure that mistakes are not affecting me much? Pitfalls are not affecting much. Then what should I do? What I have to make sure is whatever resources are there in the organization, these resources are utilized to the best. Strengths are enhanced. Facilities are improved. You are providing very strong leadership. I'm just elaborating it further. Your resources are used at the best level. Your strengths are enhanced. Your facilities are used in the best way. Strong leadership is ensured. Employees are always committed. When you have such, this is your defense mechanism. This is what is called a defense mechanism. You are strengthening, you are minimizing your weaknesses. You are ready to face challenges. That will be called as your defense mechanism. Next, strategic. What is the next benefit we have here? Strategic management provides longevity and stability. Just now I wrote no, longevity and sustainability. How longevity and stability are enhanced? Because you are adapting to the environmental changes. Development of core competencies. You know, competency is nothing but your expertise and skills in that particular domain. So when strategic management helps to develop core competencies helps in increasing your growth. Your competencies help to improve your profit, and core competencies also help in gaining competitive advantage because you are superior to your competitors. So in all, how do we summarize strategic management benefits? Benefits of strategic management, can you just quickly summarize? Clear goals, clear future direction, and strategies would be mostly proactive strategies. You can find your opportunities and utilize them in the best way. Provides good framework for proper decision making. Gives longevity because you are adapting to all environmental changes. And moreover, we can develop core competencies through strategic management. Let's finally conclude the strategic management part with limitations. Limitations, the first one we have to talk about here is environment is complex. Environment is not only complex, it is also turbulent. That's commonly seen word in your material, right? Quite turbulent because external environment is projected to lot of dynamic changes. Why dynamic changes? You can't predict when what type of change can come up. So dynamic changes, because of these dynamic changes, environment is considered to be quite complicated and quite turbulent. Because of which what happens is the strategic plans you make may not meet your objectives. Your plans might get deviated. Your plans might get jeopardized. Your expectations might not be met. Why expectations are not met? Why your strategic management didn't work out good for you? Because environment is quite turbulent, going through dynamic changes. Next, we say strategic management is a time-consuming process. Why it's a time-consuming process? Because first you have to go with formulation. Formulation, are we going to make one strategy? Means no. We are going to make lot of alternatives. And these alternatives have to be analyzed. Analysis, is it simple? No. You are going to go for a very deep analysis. And then you are going to implement. After implement, you are going to evaluate. And after evaluation, you are going to make some necessary correction. And this is going to be a cyclic process. So it's very time consuming process, quite complicated and not always easy to implement. Doesn't appear so easy as it appears to be. And the next limitation we say is strategic management includes lot of costs or expenses. Why? Because strategic management can't be just done by any person. It requires a lot of expertise. Strategic management demands a lot of expertise. The managers who are handling strategic management require a lot of skills. They should have a lot of competence in handling strategies. The last point limitation is, okay, one reason is environment is changing, so your strategies never go as planned. Another reason why strategies never go as planned is your competitors. Why competitors? Because competitors always take whatever decisions and plans they have, the projects they take up, do they make it public? No, right? Competitors always take decisions which are closed door decisions. They are always kept quite confidential. There is no leakage here. They're always kept quite confidential, and competitors' strategies you can't predict. So that was also one reason why your strategic management and its related objectives can't be met. Unpredictable. Are we okay with this? Didn't feel like just leaving it off altogether. So quickly taken you through what is strategic management, what are its process elements, what are its benefits, and what are its limitations. So in overall summary, can you tell me, let's put down, what are all the limitations of strategic management? What are the limitations of strategic management? If you have to make a summary of it, it has huge dependency on environment, which keeps on changing. And then the next limitation is a lot of costs are involved, and it's a very time consuming process. And we also have dependency not only on environment, your strategies also depend on your competitor. And competitor strategies can't be predicted. Why? Because they always keep it confidential. They are closed door decisions. They don't prefer to make it public. These are core points you need to be focusing on. Right? Shall we go further? So to conclude this, there are some core elements of strategic management, which we start with: intent, vision, mission, goals, and objectives. Now, I will just brief you up on strategic intent. Will not be going through more details. We'll give more time for vision and goals and objectives. Let's talk about what is strategic intent. Intent is your intention, right? What you want to do and why, right? So what is strategic intent? Strategic intent always refers to what organization wants to do and why. What organization wants to do and why. So that means I'm not only telling what I want to achieve, but I'm also telling why. So what is must when any organization is going to decide on their intent? Intent always should have clarity. And intent always refers to what means what organization strives for. Let's proceed further on philosophical base of strategic intent. You can give 2 stars to this, mark it up. It's considered important for your exam, but again, do not waste your time here, but again, do not ignore. So, philosophical base of strategic intent, what does it imply? What does it indicate? What does it provide? And what does it show? Right? This is what I'm going to describe. Philosophical base of strategic intent implies what purpose organization wants to achieve. It indicates what are the future objectives of the organization, which is nothing but what? If I'm telling you, this is what organization wants to achieve in the future. This is what they want to achieve by next 3 years. What is it? Next 5 years, this is what they want to land. This is where they want to land in next 5 years. What is it? Vision? Vision? So, indicates vision of the organization and provides all the means to achieve those objectives. So when you know what are your future objectives, you know how to achieve them. It's providing all the means to achieve your future objectives. Can I say, based on these, I shape up, this is next 5 years, this is going to be my market position. These are the opportunities I have to utilize in next 3 years. So it shows what are your future opportunities and future market position. So what is the philosophical base of strategic intent? If you have to try to consolidate all the points here, ignore the points what I have given side headings. So let's summarize. What is the philosophical base of intent? Why intent for an organization? Without intent, organizations cannot conclude on what is their purpose, what is their vision, how to achieve that vision, and if they achieve this vision, what could be their future position and future opportunities. Right? So, 4 key points you have to conclude. Intent describes what purpose organization has, what is their vision, how to achieve it, and through this course, what opportunities they have and what could be their future position. Clear? Now let's talk about the components of intent. 4 components of intent, as you can see here. What are they? Vision, mission, goals and objectives, values. I'll be taking you through 3, but mission I'll just brush up, not in depth. Can I go further? Can I change the scope? Okay, let's first talk about meaning and role of vision. What does vision represent? Importance of communication and essentials of strategic vision, which is very important for your exam. Now let's put down all the basics you need to understand about a vision, ignoring what we have here. Then I will relate each point under each side heading, right? First, let's talk about the meaning and role of vision. Vision is nothing but a long-term future plan of organization. It can't be short-term plan. It is always a long-term future plan. So that itself tells you a vision always has to be future-oriented. A long-range future plan for organization, and a vision always is future-oriented. Then what is the vision concept explaining? Vision always explains where organization wants to be in future. And whenever a vision is drafted, if I ask you, who is responsible at which level vision gets crafted? The vision is developed at top level. But do we keep vision restricted only to the top level means? No. Whatever vision is developed, it has to be communicated to all levels in the organization. Why that communication becomes so important? Because from each level, every employee should have common objectives and unified direction. Every employee should work for vision of the organization. That is why I'll take you here. A vision always has to be communicated to all levels of organization. Once it is communicated to all levels of organization, what is the benefit you can see is all employees can contribute to vision. And they have uniform objectives. That is how we explain the importance of communicating vision. Now, by this fact, you must have understood that vision is not restricted only for top level. Every level of the organization should follow vision. So, what is the next point we will put down as it's given in your material? Every subsystem of organization has to follow. Now, what do you mean by a subsystem of organization here? It can be one division, one department, or it can be one employee or one manager, or one area or domain of work, one team, a collaboration of teams. But every subsystem of organization must follow vision. And next, let's talk about the role of vision here. Vision always tells organization to achieve your future objectives in a perfect way, what changes are required and why those changes are required, so that you can prepare yourself for your future objectives. Can I say vision is an attempt of future preparedness? You are trying to assess what you need to achieve in future. What are your long range future objectives? So what that can't be achieved with your current scope, that may not be achieved with your current resources, that may not be possible to achieve with your current technology. So always you need to make some changes. So role of vision is described in 2 points, just 2 points. What changes and why. So vision always describes what changes are necessary and why those changes are necessary. Can we go ahead? So now in overall, what is that you understood about a vision? A vision is nothing but long-term future plan. What organization wants to be in future, where they want to land. So a vision always has to be kept future oriented. A vision has to be communicated to all levels. Every subsystem in the organization must follow vision. And a vision's role is to explain organization, to help organization assess, to reach their future objectives, what changes would be necessary and why those changes are necessary. Now let's talk about essentials of strategic vision, which is very, very important. Who are going to draft vision? Developing vision is the job of top level managers. So first essential element is you need to have managers. These managers should possess certain characteristics. These managers should have good creative thinking. They should have intelligent entrepreneurship. Intelligent entrepreneurship means if on need basis I have to take an independent decision as a top level manager, I should be in a position to do so. So I should have creative thinking. I should have intelligent entrepreneurship. I hope I have spelled it correct. And managers always should have future orientation. This is must. Without future orientation and future planning, managers can't develop a vision. And managers should possess competence. This is the basic requirement for developing strategic vision. And a vision always has to be well articulated. Well articulated means it is properly organized, it has good content in an organized and formatted manner. It has to be well articulated so that whoever reads it, audience can easily understand what is its sense. So a vision always has to be well articulated, and you have to make sure while drafting vision, use best wordings. Best wordings and well articulated vision always keeps employees motivated. See, you are an employee. As a top manager, I give you a vision which you can't understand. Does it make sense? A vision always has to be understandable to all, right? Readable, right? So a vision always keeps employees motivated. That is why a vision always has to be kept well articulated and best worded. To the extent possible, make sure your vision is unique, Do not have lot of duplication in making vision. Keep it unique. See that you are not just making it very generalized statement. A vision statement always has to be unique, not generalized. Are we good with this? So these are essentials of strategic vision. One more word you can add. Keep your vision always specific. So this is about strategic vision. So to summarize the points here, so if you have to give me a cluster of key points, ignoring all the side headings I have given you, forget about the grouping of points we have done. So what points you remember when you talk about a vision? Who is going to draft it? Can I say to the beginning, a vision draft, developing a vision is the most basic step of strategic management. Very early step. Early in the process of strategic management, we start with developing vision. So can I say this is the most early step of strategic management? Who is going to develop strategic vision? Let me ask question and I will derive answers from you. Who is going to develop? Top level managers. Is it restricted to the top level? Communicated to all and has to be abided by all levels. Every subsystem must follow. And how your vision must be drafted, not keeping only the current scope in the requirement, you have to keep full future oriented. So it actually describes where organization wants to land in future, what they want to achieve in future. So it gives clear future direction to the organization, right? And its role is what changes, why those changes, and how your vision must be kept. Suppose if your question is what are the characteristics you should follow while developing a vision? The basic characteristics is, see that while developing a vision, you are having creative thinking, intelligent entrepreneurship, competence. You are keeping always, your mindset should be future oriented, long-term thinking, and a vision always must be well articulated, use best simple wordings, understandable, and should keep employees always motivated, specific and unique. So that's about vision. From vision, what do we extract? Mission. What is the prime? I'm not going to discuss more in depth about vision, but the prime difference I want to ensure you understand. Vision is future oriented, but while drafting mission describes the current scope of business. We are going to keep our scope restricted only to the current scenario. Vision is always future oriented. And as one key point, like how we have learned characteristics of vision, let's discuss about characteristics of a mission statement. A mission is extracted from vision. Core for strategic management because based mission gives identity to the organization. Every organization's identity and their existence in the society depends on their mission statement. Why organization is existing? What is the reason for their existence? What is their contribution to the society? Can be gauged based on the mission statement. So mission is always considered as the core component of strategic management because that describes the identity of the organization. Now, while drafting a mission, certain characteristics go here again. You have to keep your mission simple. Keep your mission also very specific. Keep your mission statement also very unique. Unique means distinctive from others, not a routine statement. And a mission statement always should be quite motivating. You don't find much of difference, almost the same. But what I want you to understand is a mission focuses on the current business, current resources, current technology, current facilities. So currently, what are you doing? What business you are in? What do, as an organization, what business you are in? What do you do? That is explained through mission statement. And one more key concept I want to keep it. A mission statement should be developed in two versions. One is you have to keep it production or product oriented, and the other one is market oriented. Now, suppose there is a company which is into making cosmetics, let's say. They can say we are making cosmetics. That is production oriented mission statement. But if you have to keep it market oriented, organic cosmetics, recycling packaging, the brand should promote something like this which attracts customers, skin friendly. Of course, cost matters, right? So that's how brands promote. So one is production oriented, which tells you what products are you making. Market oriented tells some additional features of the products which attracts more customers. A mission must be both production oriented and market. So what is the best suggestion given by Peter Drucker? Do not keep your mission always product or production oriented. Also make it market oriented. Keep this. This will help you in addressing certain case scenarios. Okay, coming to our core one, goals and objectives. Now I would like to ask you, as you have already listened to the concepts from somebody, I would like to ask and know from you people, what is the prime difference you observe? Practically no much of difference between goals and objectives. Goals and objectives both represent the end results or the final outcome. Yes or no? Goals and objectives always represent the final results or the final outcome, end result. Practically, when you use these two terminologies, practically we do not observe much of difference between goals and objectives, but a small line of distinction goes between goals and objectives. How do they differ from each other? When you have to speak of goals, goals are always discussed as open-ended attributes. Now, what do you, or if you have to ask me, why goals are open-ended attributes? Because goals are constantly kept modified. You keep changing your goals. But objectives are considered as the closed-ended attributes. But on a common note, both describe the end results and final outcome. Now, whether you talk about the role of objectives, or if you have to take any question in your exam as benefits of objectives, under role of objectives or benefits of objectives, the points you orient your presentation would remain the similar points we go through. Role or benefits of objectives. First of all, let's talk about what is the role or benefits. You can consider the same points. I'm giving you that clarity. Objectives always work out as yardsticks. If you have to measure your performance, how much you have performed, what is your level of performance, can be measured through your objectives. So we say objectives work as yardsticks to measure performance. And objectives work like benchmark. Now, can anyone tell me here what do you mean by a benchmark? Benchmark is like a standard you have set for yourself. This is the minimum performance you are going to exhibit, right? So, objectives work like a benchmark. So, that defines in how much level you have to perform. Minimum performance is guaranteed. Minimum quality is guaranteed. So objectives work like a benchmark in exhibiting good performance. And next, objectives help to minimize. Because when you have, okay, do not go with this first. Let's logically get driven to that point as a conclusion. Objectives, when your objectives are clear, can I say you know clearly how you should work? What is your end result? You know, your target is clear, and towards reaching that target, what you should do and how you should do, it's clear. So objectives always provide a clear direction. And when, suppose let's say for example, I give you, now take your syllabus only for example. Your objectives are, you need, for exam, you need to cover all 5 chapters, but you don't traditionally go with old school of thought 1, 2, 3, 4, 5, right? You have your own priorities. Without priorities, no work is handled. So when you have clear objectives established, you can set clear priorities. So clear direction, clear priorities, and most importantly, because of having clear direction, how to work, and clear priorities are already established, it helps to minimize conflicts and uncertainty. So because you have a clear objective, clear direction, and your priorities are clear, there is no conflict, there is no uncertainty. So objectives help in minimizing conflicts and minimizing uncertainty. And next, let's go proceed with the next aspect. When you have clear objectives established, the next benefit what organization sees is jobs can be designed very clearly. Now, if an organization has an objective, let's say, let's increase sales in next 6 months by 10%. Their objective is clear. And towards that objective, do they need to recruit any staff? What steps they need to take? And what tasks they need to fulfill? So their jobs are well designed. Their tasks are designed. So here we have well designed jobs. Not only jobs, we have well allocated resources. And these resources can be put into proper usage. So these are all, see, with resources, what you need to always understand is resources should never be kept idle. Avoid wastage of resources. Resources always should be utilized, optimum usage. Optimum usage of resources is must. So when we talk about optimum usage, clear objectives always help in optimum usage of resources. So that's how we talk about the role or benefits of objectives. Can we conclude with key point summary? On what points you will focus? Yardstick, benchmark, direction, priorities, jobs, resources, usage. Minimize it, uncertainty and conflicts. Shall we go ahead? Now comes the next very important question you can go through. This is your Jan attempt question. For 5 marks, I just took a screenshot from your paper. You can see. So ultimately, forget about all the story that's there because question always will have a story. What you need to focus on. Ultimately, what is your focus on? Characteristics of ideal objective. So let's keep our points there. How any organization, what kind of objectives are claimed as ideal objectives? So basic characteristics of objectives. How you want your objectives to be? Objectives always. See, as an employee, suppose you are given some routine task, routine desk work, and last 6 months you are doing the same task. Are you happy? For few days you are happy, because you are having peace of mind, no pressures, no tensions, no deadlines, no targets. But after 6 months, you'll start worrying because you are the first one in the list when layoffs happen, right? So always, what's must? Always keep your objectives challenge. Do not keep them very simple. No one is happy with such simple objectives. But do not go for very challenging objectives which are impossible to achieve, right? So, which is practical and possible to achieve. That is one more point. And next one, objectives always, how much you have achieved them, what objectives are good, how much they are possible to achieve. Objectives always must be measurable. And am I allowed to change the objectives, or once I fix on some objectives, 10 objectives, or next 10 years, I go with same 10 objectives? It can't be like that. Objectives can be changed. So objectives should be flexible and controllable. What do you mean by flexible and controllable? You have controllable in sense you can always lay down your objectives, or you can go for much complicated objectives. It's up to the organization. So objectives always have to be flexible, measurable and controllable. And do I have all the lifetime to achieve the objectives? Objectives given to the organization, they should target to achieve them within a designated time frame. So always objectives have to be time based. What do you mean by time based objectives? We can achieve those objectives within a designated time frame. Done with this? So can you just give a look back to these points? How you expect your ideal objectives to be? Challenging, but still possible to achieve. Measurable, flexible, controllable. This goes on one hand. Now let's draw a line. Let's give two more key points how your objectives should be. I have objectives which are very ideal, very good, everything is fine, but I don't have resources to achieve them. I do not have staff, I don't have technology, I don't have machinery, hardware ledu, software ledu. So how do I make it possible? So whenever organization is fixing up on certain objectives, always it's must. So when organization has fixed on certain objectives, always fix objectives, always relate them to the organization resources and to the organization's environment, which is must. And moreover, organizations can't be too disjoint. Disjoint objectives do not work for organization. It becomes quite hard to achieve. That means what? If I am achieving one objective, I should have achieved something better in the other department. If one way it's going good, its impact should be seen in other departments as well. So objectives always should correlate with each other. This is very, very important point not to be ignored. Correlated with each other means interrelated. Do not go with objectives which are quite disjoint. Are we done with this? So we have discussed about the distinction between goals and objectives, role or benefits of objectives, and characteristics of objectives. Shall we go further? Yes. This concept you can expect for case scenarios on interpretation based questions and MCQs. Objectives are basically distinguished, as you can see clearly from the board. What are the two types of objectives we have? Short-term objectives, long-term objectives. Will organizations have an option to choose only short-term or to choose only long-term? Means no. They have to go with both the objectives. Short-term objectives always will be very specific. Short-term objectives are always very clear, easy to achieve, and they show immediate improvement. Yes or no? But is organization, because of so many advantages, can organization fix up only on short-term objectives? Means answer is strictly no. Long-term objectives are also must. Long-term objectives help organization in long-term future positioning and in attaining long-term competitive advantage. And hence, what is the last point I have given here? There is a need for both. Now, if I ask you which comes first? Long-term objectives, which are further again bifurcated or divided and divided into short-term objectives. Are we okay with this? So that's a quick revision on goals and objectives. Finally, let's go with values. Give me first of all, what are values? Now, as a customer, will you buy any product from an organization without values? Suppose, if any product is tested enough, you can see a product giving advertisement that they are not tested on animals. They are chemical free, sulfate free, preservative free. So there are a lot of points being told to customers, right? So now when you are buying, you always find or feel a need to buy from organizations which is sticking to their values. Values are must. So first of all, let's talk about what are values means. Values are basically described as deep-rooted principles which organization must follow at any cost. And these values are never compromised. No organization will compromise on values even looking for any short-term gain. Suppose, say for example, you are a loan agent working in a bank. You have some target. Looking for some target, you can't keep issuing and approving loan applications for those customers who are not eligible for loans. Got my example? Correct. So at any cost, looking for short-term gain, values should never be compromised. And the next thing, what values actually explain means how organization is going to take their decisions and how employees are going to behave. See, if everything is fine, everyone will talk of values. Values come into how much you stick to them matters. See, do not murder, do not steal are good values till the time everything is fine. But the person who does, they have their own reasons, right? You ask them, they have their own reasons. Values, but should never be compromised. So, values actually describe how organization take their decisions and how employees behave, not when everything is fine, but under adverse situations. This is nothing but your value. So how do you explain the concept of values actually means how your employees are behaving, how an organization is taking its decisions under adverse situations. Can we give few examples of values? I think your material goes with 5 or 6. Integrity. Go ahead. Trust. Accountability. Oh, come on. You should be remembering. Integrity, trust, accountability. Go ahead. Humility. You understand what is humility? Humility is where you are open for change. You know your strengths. Suppose if I am a person, I know my strengths very clearly, but I'm not aggressive. I'm not overconfident, and mostly I behave in a very humble manner. Then I would say I'm sticking to one principle or value called humility. Humility is where organization knows their strengths. They know, they realize their strengths and they are open for change, but they don't take any aggressive actions or aggressive decisions. And then the next principle of value we gave is innovation, and you can add within brackets diversification. I think we will discuss about diversification in the next chapter. Innovation, next chapter. By the way, innovation happens to be the question in the most recent attempt. What are its benefits? What are its risks? That's the question in the Jan attempt. Are we okay? So you knew what are values now. You know what are the examples of values. Now let's talk about what is the preference of employees and consumers. No consumer wants to buy products from any organization, or no employee feels like working for any organization. Now let's say I'm basically a trained hacker, by the way. Now let's say if I say I will teach you hacking skills, come and learn from me. Will you come and learn from me without proper licensing and without proper thing? Means if you feel that is going against your values as an employee, if you are joining in any licensed company and learning from authenticated source, fine, that's good. But to the extent possible, as an employee, you don't want to associate yourself with any organization which has no values. When people ask you, where do you work? You should take some pride in telling them, where do you work, right? The organization must have the values. Now you will compare values and intent, which is again a case scenario based question. I will ask you one simple concept. Are values and intent both same? Means answer is strictly no. Intent describes what organization wants to achieve and why. Values are deep-rooted principles of the organization which are never compromised at any cost. Which is much broader concept, means values are much broader concept when compared to intent. Finally, I would like to conclude with significance of values. Give 3 stars. You may expect a short answer question or a sub question integrated in a bigger question. Significance of values in an organization. What is the significance of values? Means, first thing, values provide long-term advantage. Values provide or allows organization to maintain good customer relations. They can satisfy their customers. They can attract new customers, and they can satisfy existing customers as well. So through values, they can gain long-term advantage. They can have growth. They can see profits. They can increase their sales. They can ultimately gain good market position. So this is how we explain significance of values in an organization. So from this, what I would say is be prepared with examples, and be prepared like how one point, how employees behave and how organizations take their decisions under adverse situations, and be prepared with what is the significance of values in an organization. Are we good with this? If you are okay, we will take up one last concept to conclude this chapter. Yes. What is the concept I'm showing here? We just learnt very, very, very important for your exam. You can predict this in your attempt. We just discussed before break 3 levels of management. What are the 3 levels of strategic management? Corporate level, divisional level, functional level, right? Between those 3 levels, what is the network relationship we have? We have 3 types of relationship between those 3 levels. What are the 3 types of relationship? Functional and divisional relationship, horizontal relationship, matrix relationship. Matrix structure we will discuss more in depth tomorrow. But for the time being, we will briefly discuss these 3 network relationships between 3 levels. On what basis divisions are made? We know in divisional structure, we have corporate level, divisional level and functional level with clear hierarchy and clear segregation of roles and responsibility. Can you tell me, we'll have a quick look back. Just now we discussed the concept. Divisions can be made based on products, based on customer groups, or we can make divisions based on geographical locations. Each division is independent. Structure of communication, how does it go? From functional manager to divisional manager or to top corporate level manager, right? This is the simple structure of communication hierarchy. Why is it useful? We also discussed this part. When is it useful? When we need flexibility, we need faster decision making. We have a large organization which is into multiple businesses. Multi-divisional relationship will work because it has a clear hierarchy, no conflict, and clear segregation and description of roles and responsibilities. Clear communication hierarchy. That is why we have a divisional relationship. I'm not going to discuss more on this because just now we finished other aspects of it. Let's now go with horizontal relationship. Horizontal relationship is also called as a flat structure. Why it's called a flat structure? Because there is no hierarchy and all are given same stature. And such horizontal, same stature. And while planning for strategies or while taking any decisions, all will participate and all have same stature. There is no hierarchy like how we have it in a divisional structure. Right. Now, the focus of such horizontal structure is to make sure it encourages a collaborative approach and teamwork culture. And because of that collaborative approach and teamwork, what is the advantage we see is we can have proper sharing. I can share my ideas, I can share my knowledge, we can share resources. So whatever knowledge, ideas, thoughts, opinions we have, everything can be shared. And because there is no hierarchy in horizontal relationship, we call it a flat structure. Now, if I ask you, what is it suitable? Suitability is where you need to be clear with, because you can expect interpretive based questions on this exactly. So what is horizontal structure? Everyone will write. What is its suitability? That's where you apply your interpretation skills. Horizontal structure is not for large size organizations. It's for organizations which are small. So maybe startups or organizations which are into innovation. Can I say horizontal structure encourages innovation? Is it wrong if I add innovation here? See, its focus is on collaborations, teamwork and innovation. So basically horizontal structure is for See, who are into IT, technology, AI industry, where you have constant dynamic changes happening, such firms can go for horizontal structure. Here also we have quick decisions. Here also we have flexibility, but only thing is the number of employees will not be more. That is why I said startups. They ideally go for horizontal structure. Now let's talk about matrix relationship. Now for matrix relationship, I should be having one diagram. Just, yeah. Can you check here? Horizontal relationship. What 4 functions are integrating here? Marketing, production, finance, HR. And they all are collaborating and believing to launch a particular product. Launching a product is not a one team's or one department's task. So when product is getting launched and it has to go successful, they all work as a team. They collaborate, work like a team, share their ideas and thoughts and make sure the event goes successful. Now let's go with, can you read what we have here? If I ask you identify one keyword, what is your focus on? What other than what I circled, other than what I have highlighted? Collaborate. 3 words when you are explaining horizontal structure, go must. Collaborative, innovative, teamwork. 3 must be there. And how you explain, it's up to your creativity, making sure these 3 words are there. Now let's go with matrix relationship. Now in a matrix relationship, as you can see here, there are 3 projects taken up by the organization. What are the 3 projects here? Project A, B and C. All 3 projects have 3 divisions connected to them. What are they? Engineering department, marketing department, finance. Project A requires engineering, marketing and finance. B requires the same 3. C also requires the same 3. Under engineering, you have employees working as engineers, marketers and accountants. Okay, now? Till now it's clear, right? So now let's say I'm working as an employee for marketing department. Okay, and each department will have their own functional manager. Each functional unit will have its own functional manager, and each project will have a project manager. Okay, na? There is sometimes one project manager can oversee 2 or more projects also. That is a possibility. Now let's talk about the structure of communication, which is more important here. If you are an employee working for marketing department, then your communication will go to the marketing department, and let's say you are working for project C. You are working for project C. So whatever findings and communication you have to make as an employee working in marketing department for project C, your communication should go to the concerned functional manager or marketing manager, and you should also communicate to the project manager of project C. So matrix structure goes with dual reporting. As an employee, you have to go for dual reporting. How this dual reporting goes is, one is you should report to the concerned functional manager, and also you will report to the project manager. Vertical communication goes to the functional manager, and we say, remember this, do not lose the concept. Tomorrow when we discuss matrix structure, this helps you. Vertical communication goes to the functional manager. Horizontal communication goes to the project manager. So this is your responsibility. Don't you think as a new employee, you will be quite confused what to report to whom? So there are some lapses in matrix relationship. First of all, again, let's talk about your writing. Should I wait? So can you read what I have written here? Vertical flow to functional authority, horizontal flow to the project. Who is the functional authority we are referring to here? Functional manager. Horizontal project flow is to the project manager. Now this is how matrix structure looks. Now when it comes to suitability of matrix structure suits organizations which are very, very large and which are quite complicated in their divisions and departments. So suitability is to large and as well as complex organizations. Now let's proceed to the flow chart and talk about what are the benefits and limitations with such matrix structure. We discussed about features, right? Matrix structure is basically suits which type of organization? Large and complex. As in, how does the matrix structure look like? You have projects. Under each project, you have functional units. Each functional unit will be headed by a functional manager. Each project might be headed by a project manager. You are an employee working for a particular department. You will report vertically to the functional manager and horizontally to the concerned project manager. Dual communication or dual reporting. Till here it's fine. Now let's talk about advantages of matrix structure. Advantages is its better coordination, suits large organizations, good coordination between projects, good coordination between departments is possible, and most importantly, you can always have a comparative analysis. You can have a comparative analysis which department is doing better, and always you can have a good communication. So good coordination and as well as good communication. These are certain benefits we have in matrix structure. I'm not going in detail. This is not the end of the story. We have a lot to discuss on matrix structure, which we'll take up tomorrow. Disadvantages. When it comes to disadvantages in matrix structure, the primary drawback we have in matrix structure is it leads to a lot of confusion among employees in what to communicate to whom. So, confusion in employees. This is the major drawback, and no doubt the matrix structure is expensive to implement. I'm not only talking in terms of money, I'm talking also in terms of efforts. Expensive to implement and expensive to maintain as well. This matrix structure is hard to understand, quite confusing to employees, and its implementation and running the structure on the basis of matrix level of communication is difficult. And always in matrix structure, there might be conflicts between whom? Conflicts between managers. As a functional manager, I feel I'm the superior authority. Project manager knows they are superior authority. There might be a lot of conflicts in understanding each and every manager's their own part of roles and responsibilities. Conflicts between managers. I would stop this chapter here. So now to conclude, tell me, relationships between three levels goes in three types. What are the three types? Functional and divisional. Next, horizontal. Do we have any, in which structure we don't have a hierarchy? Means horizontal structure. It's lateral relationship or is also called a flat structure. You can also use the word lateral. Lateral. Horizontal relationship is also lateral. all have same stature and all can participate in planning and decision making. Hence, this structure provides benefits like collaborative approach, communication, and innovation, good teamwork culture. So, it's only small organizations or industries which are in innovation, IT industry. Shall we stop this here? So this first chapter concludes here, and I think I have shown you questions from exam. One question goes on, write a short note on the concept of strategy. I think I have shown you another question which goes on goals and objectives, what are its characteristics. And then we discussed about one more question which I have shown you on, I think that's all. You have seen this? This comes under, I will show you only this diagram. Tell me which structure? Multi-divisional. This knows, right? As I didn't show you, horizontal communication. Irrespective of your department, all vice presidents have same stature, managers have same stature, all participate, collaborate, and take decisions. Done? We concluded here. So before we start the next chapter up fresh, you feel like taking a quick break and coming back, or can I continue? A quick break, let's make it quick. You can take more than 2 minutes. So we have completed first chapter. Now we'll go with one of the most important concepts for your exam. Very important chapter. Chapter 4, strategic choices. I will be focusing more on few concepts, but I will take you through. Let's have a quick brush up. Let's have a very quick brush up of the concepts. First, intro is must. You need to know the revise your basics first. And then we will go in depth with key concepts. So now in this chapter, as this is a quick overview of this chapter, we will learn, see, you learnt in first chapter about what is strategy, what is strategic management, levels of strategic management, network relationship between levels, the concepts of management, and we also learnt about the components of strategic management like intent, vision, mission, goals and objectives. As you are done with the basics, strategies come in various forms, and which strategy would be the right strategy to the organization will be coming under strategic choices. Now, taking a quick overview, you will learn strategies, you will learn about strategic exits, and you will learn about portfolio analysis models. And though there are 4 models discussed, I will be focusing more on BCG, which is very important for your exam, the most expected one. I'll briefly brush you up through other concepts and help you understand how they differ from each other. So let's first talk about the different types of strategy. I made a very quick flowchart. Hope everything goes in one scope, one screen space. It's clear to read, no? So as per William and Lawrence, strategies are grand or directional strategies which are stability, growth, retrenchment, combination. Now, I will take you through in depth based on as the further concepts we cover. I will talk about more on this. For the time being, just make a note. So, as per William and Lawrence, strategies are termed as grand or directional strategies. Why they are called grand strategies? Because many organizations follow these as common strategies. And these strategies come in four: stability, growth, retrenchment, combination. Combination means you can use these strategies and customize them as per organization's requirement. You also use the word tailor-made. You understand what is tailor-made? Tailor-made means you customize and develop a strategy combining two or more so that it suits your own requirement. So combination strategies are usually tailor-made. Tailor-made as per organization's requirement. Okay. Now, the next section of strategies go as per Porter. Porter has claimed what type of strategies? Competitive strategies. Competitive strategies are basically two: cost leadership, differentiation. And adding a focus element, we have focused cost leadership, focused differentiation. Now, let's talk about cost leadership first. So, what are the competitive strategies? This is your exam question. Explain the different competitive strategies. Then your explanation should go towards cost leadership, differentiation, focused cost leadership and focused differentiation. Now, let's talk about cost leadership first. Now, what do you mean by cost leadership? Now, cost leadership is where organization wants to win the competition. So, they want to become superior to their competitors, win their competitors by becoming the lowest cost producers in the market. So, they don't want to win the competition through any other strategy. So, what is their strategy in cost leadership? They want to win the competition by becoming the lowest cost producers, right? Lowest cost producers means they are trying to achieve the economies of scale. Per unit cost will get reduced. When you are selling at such less price, definitely they can attract more customers. Their focus is not on any other customers. How do we define? Cost leadership, they focus on the broad mass market. This is their focus. So they want to win their competitors. They want to win and gain good market position by becoming the lowest cost producers in the market. Lowest cost producers means they want to achieve economies of scale by selling products at very less cost. Then your question must be, when they are reducing cost, product price per unit cost, then are they not taking the cost factor? Are their expenses not getting increased? Means yes. So what they try to do, to achieve this economies of scale and to reduce the per unit cost, organizations try to reduce their overall cost factor. Let it be the manufacturing cost, let it be the shipping cost, or let it be the machinery cost. So or let it be the HR cost, salaries and payments made to their labor, employees, staff. So whatever cost they have, their overall cost they try to reduce and achieve economies of scale by focusing on broader mass market. Please remember one word when you are explaining cost leadership. It goes incomplete without you using. Their focus is always on broader mass market. And are they compromising on quality? Means not that poor quality. They maintain minimum quality standards, but do not expect a premium service from them, because their cost is they are giving you products at very lesser price. Done. Now, such cost leadership has its own advantages and its own risks. Advantages is when you are selling at such less cost, you can attract more customers, your sales will improve, profits will improve, your market scope will increase, competitors cannot easily beat you. So definitely there is a benefit point to it. But if I have to focus more on what are the risks we see in cost leadership, the risk we see is cost leadership becomes very expensive if their sales are not increasing. They have to target sales and high volume. So they need to focus on very high volume of sales. Otherwise, cost leadership ends up becoming expensive rather than becoming beneficial. They should target very high volume of sales. They should target more number of customers. Otherwise, and reduce their overall expense. Otherwise, there might be a scenario where cost leadership might turn to be very expensive. And above all, you will lose your edge in the competition if any competitor in the market tries to copy your strategies. If your strategies are copied and they are also making the same product available at much lesser price than you, your cost leadership strategy loses its edge. So the one more risk is competitors may copy. So the day competitors are copying your strategy, the objective of cost leadership is lost. Are we clear? So did you understand? I'm keeping on hold these ones because for this I need to take you to the product life cycle. We have a graph there, picture there. We will discuss all these strategies once we go. But for the time being, we are discussing competitive strategies. So did you understand the concept of cost leadership? Now, what is the next competitive strategy we are talking about? Differentiation. Differentiation is completely contra to cost leadership. Can you tell me what do you mean by differentiation? Remember any minute of the concept? You don't want to become a lowest cost producer. You want to produce products. The products as an organization you are launching or producing, the products are very, very innovative. They are having better design. The products are having better features and premium quality. But not inexpensive. The products definitely would be costly. They are not targeting. Best example what you can take is Apple. Now, if you have to talk about Xiaomi phones, they are definitely cost leaders in the market because they are selling affordable phones with better features. But if you have to talk about Apple, did they ever sell any phone model at very throwaway price? No. They are not for reducing the price. They are not cost leaders in the market. They are known for making phones with better features, premium quality, better security. So their target customers are different who can pay more. So the products would be definitely costly. Costly products with better features, better design, innovative, and their after sales service also would be very, very good. So that is why we call it as differentiation. So they want to win the competition by making products which are different from others in their design, features, different in the form of after sales service, premium quality. So everything they want to keep it very premium. One more example, you can give luxury segment of cars like BMWs. They are also not known. If you talk about Suzuki or Maruti cars, they are definitely cost leaders. But on the other hand, if you talk about BMWs or other cars which are in the luxury segment, definitely they are not into cost leadership. They are making cars with better features, better design, premium features, luxury features. But are they not? They are not selling them at a lesser price. So they are not known for lesser cost. They sell at high price. So that's how you can talk about cost leadership and differentiation. Now, what is the significance of this focus element here? Rather than focusing on the entire market, you try to focus on one narrow market segment. Then we call it as focused cost leadership or focused differentiation. And this narrow market segment would be referred as niche. So rather than focusing on the entire market, you try to focus only on one narrow market segment. Let's say an organization is into making only infant range of products. So they are focusing only on one segment of market. Suppose if an organization like say for example, there is a pharma company. A pharma company makes medicines only for critical healthcare, like maybe cancer or brain patients, like that. Critical healthcare, not regular medicines what we take for fever, flu and all, but critical healthcare. That means what? They are focusing only on one narrow segment. That is what is called as focus. And this focus can be applied to cost leadership strategy or can be applied to a differentiation strategy, and hence we call it as focused cost leadership or focused differentiation. Are we okay with competitive strategies? So using these two strategies, organizations can win over the competition. Now let's talk about functional strategies which are made for each and every functional tasks or departments like logistics, HR, finance, marketing, production, customer service. For each and every department or each and every functional unit, you make strategies. They are called as functional strategies. You know for the very fact that the strategies that are made for a marketing department cannot work for HR. Strategies made for HR department can't work for admin. Strategies that are made for admin can't work for customer service. So each department needs its own specific tailored strategies. They are called as functional strategies. So altogether, in this flow chart, we have covered three types of strategies. One is grand or directional strategies as per William and Lawrence. Next, competitive strategies suggested by Porter. Next, functional strategies made for each and every functional unit. Now, as we have directional strategies to cover, let's further go with. So, we are talking about types of strategies in detail. We can have strategies made for each level. I'm not going to elaborate this because just now we discussed corporate level, business level, functional level. Let me ask you quick questions. At which level implementation of strategies is taken care? At which level mission is translated into concrete detailed strategies? For each and every division, business level. Vision and mission get developed at top level. Any major decisions, like say for example, major decisions to be taken on investments, any major decisions to be taken on mergers, any decisions taken in acquisitions or forming alliances, partnerships, such decisions are taken at which level? Corporate level. Budgeting, financing, planning for finance, planning budgets, all major decisions and major planning happens at corporate level. At business level, this mission statement gets drafted into, which are easy to implement. See, at top level also strategies are made, business level also strategies are made, but top level strategies are long term. Implementation is difficult. So they need to be translated into short term objectives. Finally, implementation of strategies happens at functional level. So let's keep this to that extent. Let's proceed further to business life cycle. Based on the product life cycle, strategies are divided into 4. What are the 4 strategies? Introduction, growth, maturity, decline. Let's quickly take through a picture. Not there. Okay, fine. Okay, fine. It's missing. Fine, no problem. Now let's say a product has been recently launched into the market, right? We are talking about a product life cycle. Let's say a product has been recently launched into the market. It needs to be introduced to the customers. So first stage, we call it as introduction. And when a product has been introduced into the market, it requires visibility, it requires lot of promotion, lot of advertisement, and lot of knowledge about the product has to be given to the customers so that more and more customers start buying the product. So after introduction, the next stage comes as growth. More and more people start buying the product gets more visibility and gets good fame and reputation. And as the product keeps growing and growing, there might be a stage where further growth for the product is not possible. And it reaches a stage which we call it as maturity. And nevertheless, the fact remains this phase of decline can be postponed but cannot be avoided. You can delay the process of decline, but decline has to happen one or other day. So from maturity, the next stage that comes is the decline phase. There the organization or the product starts losing its demand in the market. No one prefers. Now, like how we have, say, I don't know whether you have even seen CDs. Have you seen? Have you seen compact discs and DVDs? I'm not sure you were even born when they were gone. They're extinct now. We no more use them. It has declined and gone extinct from the market, right? Why would someone buy? And over a period, I think pen drives also will be soon extinct from the market. Already we stopped using them. Because of thanks to cloud technology, we stopped using all this. So this is how, every product goes through this life cycle, 4 stages. Now, when a product has been introduced into the market, it requires penetration strategy, where it needs visibility in the market. Customers should know about the product. So they need to enter the market and have their scope and space. So it requires penetration strategy. And in growth phase, a product requires an expansion strategy. At maturity stage, they say, do not take any dynamic decisions. You don't have to revamp anything. You don't have to redesign your strategies. Don't do anything. Whatever profits you made till then, start harvesting them. Reap those profits, derive those profits, invest somewhere and watch the show. So that's what they say. At maturity stage, what strategy would be helpful means stability. At stability stage, in BCG matrix, we'll know more about this. At stability stage, no huge investments, no dynamic decisions. You will grow. Stability, many people get stability is not do nothing. Stability doesn't compare to do nothing strategy. Do nothing is completely different. At stability, you grow. You take good decisions. You are seeing profits. You are remaining updated about what's happening in the market. But you don't make any major investments. You don't take any risky investments on risky decisions. You keep getting the profits. You consolidate all your returns. Right? And in the decline phase, which strategy is helpful means retrenchment. Retrenchment comes in 3 versions. One is a turnaround strategy, where organization wants to revive their operations. It's already in a decline phase, but it wants to come back. Right. Next comes after turnaround. The next retrenchment strategy is divestment. Divestment is only a partial closure. And next comes liquidation. Liquidation is a complete sell-off. Now let's give one small example for divestment. All of you have gone through COVID phase, right? Where people were not going to any restaurants where there is a dine-in facility because people were scared to go to restaurant and eat there. So dine-in no one was preferring. But did the restaurant close? Means no. They were closing the dine-in facility, but they opened the cloud kitchen where they were taking orders online, preparing the food and delivering food online, taking care of all the safety and security precautions, isn't it? So that comes under divestment. Suppose if there is one branch which is not doing good, there is a branch which is consistently taking losses, whole organization won't shut down, right? Suppose let's say Domino's one outlet here in Amirpet is not doing good. You don't close all the outlets, right? You close only one branch, and that is divestment, partial closure. Suppose if organization completely exits from the industry, it would be termed as liquidation. Like how do you have Satyam anymore? Satyam Computers, it has been taken over completely by Mahindra, right? So it's now called Tech Mahindra. So it's totally sell-off. They have acquired it. Turnaround means organization doesn't give up. Though they are in the phase of decline, they want to take every step to see that they revive their operations and come back to normal stage of operations. That is called a turnaround strategy. Turnaround strategies are for survival. If turnaround attempts fail, then organizations can think of divestment. Are we good with this? Shall we go further? Now you know what are the 4 stages in the product life cycle, and at each stage which strategy would be suitable. So based on product life cycle, you have introduction. Which strategy would be required here? Penetration. At growth stage, which strategy? Expansion. At maturity stage, we require stability. Is stability do nothing? No. Decline phase, they go for retrenchment. Retrenchment can be in the form of turnaround, divestment or liquidation. Are we good? Now let's talk about competition oriented strategies. Competition oriented strategies come in 2 forms. What are they? Can you read out? Competitive strategies, collaborative strategies. Competitive strategies, just now we have finished. We have cost leadership and we have differentiation. All right. And we can also have focused cost leadership and focused differentiation. Collaborative strategies could be where 2 or more organizations combine together and implement their strategies and go for their operations. Collaborative strategies can come in the form of merger. One more collaborative strategy can be in the form of acquisition, or it can be in the form of a strategic alliance. Are we good with this? So this is a quick brush up of what are the different types of strategies. So now let me ask you quick questions. So give me grand strategies or directional strategies. Stability, growth, retrenchment or a combination. Give me competitive strategies, cost leadership, focused cost leadership, focused differentiation. Right. Collaborative strategies, merger, acquisition, strategic alliance. Based on product life cycle or a business life cycle, we have introduction, penetration, expansion, stability, retrenchment. Retrenchment comes in which stage? Decline stage. Now we will be focusing in detail on corporate level of strategies. Corporate level strategies come in 4. As you can see now, These are the strategies commonly opted by organizations: stability, expansion, retrenchment, combination. Shall we proceed further? So let's first talk about stability strategy. In stability strategy, just take a quick look on what we will be discussing. What is stability as a strategy? What are its characteristics? And why firms choose stability strategy? This is important for your case scenarios. And why startups don't aim for stability strategy. These are the concepts we will be discussing. What is a stability strategy? I'll give you all the points, complete set of points, what you need to keep in mind when you talk about a stability strategy. Stability strategy is required at which stage? Maturity stage. And at this maturity stage, organization doesn't want to take any dynamic decisions. Organization wants to continue in the same business path. And they want to focus on same set of products. And they want to focus on same customers. They don't want to geographically expand, venture into new markets, new industries, launch new products. They don't want to do all that. What they want to do is continue in the same business path. Focus on the same customers, same products. Now, towards this strategy, what organization does then? Is it do nothing means? No. What they try to do is, they try to consolidate all the profits and returns they have gained till now. So whatever position they have gained, whatever market share they have got till now, whatever profits they made till now, they try to consolidate everything and try to harvest profits. Now, going further, what happens in a stability strategy? In stability strategy, what they try to do is, they are not just closing their eyes and they are not going in a deserted, isolated place. They are still in the market. They are still in the market. They are still in a very good position. So what they have to do is, they have to always remain updated with what's happening around them. How competitors are changing their strategies, how competitive actions are seen, how the environment is changing. They have to always remain updated. And stability strategy helps in optimizing returns, not just keep there. It helps in optimizing returns. It helps in providing growth. It gives stability strategy, also gives returns, provides growth. But this growth will be a dynamic growth where you move from A to Z position means no. Very minimal growth. Do not expect huge growth and huge returns. Returns will improve, but not dynamically. Growth is seen, but not dynamically. I'm changing color and writing just to tell you that it's a very key point, definitely not to ignore in your presentation. The objectives that are given in a stability strategy always should be well established objectives and well tested objectives. That means you are already seen these objectives being achieved and these objectives are already well tested in advance. So you are not going to frame any venture up with new objectives. No. You will use objectives and stability strategy which are well tested and well established. You don't want to go with any kind of experimentation there. This is what you need to know about stability strategy. Now let's go further. I'm continuing, though I kept under characteristics. You can just take a continuation of points, though they are listed under characteristics. Stability strategies, first characteristics, it's very, very safe strategy. Is there any risk factor involved in this? Means no. very less risky. Is there any dynamic decisions taken in stability strategy? Means no. No dynamic decisions and no dynamic objectives and strictly no to major investments. You are not going to demand any major or fresh investments. Doesn't demand. Stability strategy doesn't demand dynamic decisions, doesn't demand any fresh investments. Then what are you going to do without any of these? Means you are just going to consolidate. Consolidate what? Just now as we mentioned, all the profits and returns you gain till now, consolidate that. And stability strategy, basically, one of the best characteristics is it helps you safeguard its profits, safeguard its interests, organization's interests, and safeguard organization's market position. So whatever position you have gained, suppose you are already a clear leader in the market, being at that top position, you don't want to fall down in next 1 week, right? So stability strategy helps to safeguard that market position you have gained till now. It helps to safeguard your profits and your interests, what your interests are. Again, one more key point, I'm changing color and writing within the box, not to be ignored. Very, very important point. You write rest all, it's fine, but not writing this makes matters most. Maintain the status quo. What do you mean by maintaining the status quo? Means whatever is your existing business scenario, you try to maintain it. That's all. Your existing resources, your existing investments, your existing facilities, existing leadership, existing management, whatever is your existing situation, that scenario will continue. That is called as maintaining status quo. Are we good till here? So how do you QUO pronounce it as quo? That's all. So what are the characteristics we have covered? Stability strategy is very safe, less risky, helps to consolidate. Keywords, only on keywords. Consolidate, safeguard, maintain, strictly no to any major fresh investments, no dynamic decisions, and all the objectives as we mentioned already should be well established and well tested. Are we good till here? Now comes your important concept. Why firms choose stability strategy? Why firms choose stability strategy? See, organizations choose stability strategy when their employees are very, very comfortable and very satisfied. Employees do not want any changes. Employees are quite comfortable and they are quite satisfied with the status quo. They don't want any major changes. And the next situation, when organizations choose stability strategy, when they have grown very rapidly. Suppose you are a startup and it's just been 2 years and you are already in the top position in the market. Now, don't you think you have grown very rapidly? And further growth expecting would be risky. So if you feel further dynamic decisions would be risky, you can stop for a while and try to use a stability strategy and consolidate all your profits and returns. So when organization has seen a rapid growth and now they want to choose stability. And the next situation that would force organizations to choose a stability strategy is environment is very, very turbulent. Very turbulent. That means what? Very dynamically changing. Under such situations, if you plan growth, no, it becomes threatening. You may even take huge losses. You may even lose your existence in the market. So environment is very turbulent and is quite threatening. Then better go for stability. Next, whenever your future plans are unclear, you are not clear like how your future direction should be, what your future objectives should be, future direction, where to go, how to go. You are unclear with future prospects. You are unclear with future direction, very unclear future prospects, future objectives. Better wait for a while so you can choose stability strategy. So these are few situations where organizations can go for stability strategy. So what did I write here? When environment is very turbulent, it's quite threatening to opt for major investments. So go for stability. Are we clear with this? Now I have one last question again, which is your case scenario. Why startups do not aim for stability strategy? Because startups can't have a stability strategy because they need to have a penetration strategy. They need to have a growth strategy. They can opt for competitive strategies like collaborations, cost leadership, or differentiation, but not definitely a stability strategy. Why? Because stability strategy is for those organizations which have already grown enough in the market and have already reached a good market position, and they already have good competitive edge in the market. They can opt for stability. But startups can't go for stability. They need introduction. They need expansion and growth. For growing, they can have competitive strategies like cost leadership and differentiation. Or if they are okay enough, they can even go for collaborative strategies where they opt for some mergers or acquisitions or ally with somebody, form some strategic alliances. So that's how they can plan, but definitely not a stability strategy. Are we okay with this? Okay. So now, as we are done with stability strategy, let's next go with what strategy do we have next? Expansion or growth strategy. I will give you few points which will describe all the facts about expansion or growth strategy. Can I say expansion strategy is quite opposite to which strategy? Stability strategy, isn't it? So expansion strategy, first point, contra to which strategy? Stability strategy. Expansion strategy can be chosen by those who have to increase their sales, who want a quick growth, rapid growth. So expansion strategy is full of promises. Promises a lot. What promises it makes means it promises huge returns, huge profits, growth, and quickly you can reach good market position. So full of promises, huge rewards also. But at the same time is also full of pitfalls. Don't you think any growth that happens all of a sudden on a quick pace won't last long? So it's full of pitfalls also. And definitely one point remains, it's a very, very risky strategy. Highly risky, but also gives huge rewards and returns. Equal and fully versatile. Versatile means suits any type of situation. Fully versatile, guarantees growth, guarantees returns and profits, and is full of dynamism. Promises innovation also. So this strategy, which is expansion strategy, now comes to, as I've put down listed few points here. If I have to ask you, which type of organizations may go for stability, we finished. Now, if I have to ask you the same question related to expansion strategy, how would you answer? expansion strategy is not for organizations which have matured. It's basically for organizations which believe in innovation, which want to innovate further. Expansion strategies are for those organizations which have a, this is the word that's seen in your material, mammoth growth ambition. Now, what is meant by mammoth growth means huge growth. Very huge growth. Mammoth itself is large. So mammoth growth ambition means they are expecting huge growth in a less span of time. Such mammoth growth of ambition, whichever organization has, they can go for expansion strategy. And whichever organization aims at innovation, they can opt for expansion strategy. Quickly increase their sales and profits. Whichever organization wants to diversify into new industries, new markets, target new customers, they can also choose expansion strategy. All these points you can put in one box. Now tell me, if I have to consolidate these points, which type of organizations would go or opt for expansion strategy? Organizations which have mammoth growth ambition, organizations which are having full dynamic strength, which want innovation, and which want to diversify. Are we okay till here? Right? Now, if we have to talk about characteristics, now characteristics also go in the same cluster of points. First of all, the first characteristic, it's a versatile strategy. Next is it's a very dynamic strategy which guarantees rapid growth and rapid returns, and completely opposite to which strategy? Stability. So it's contra to stability strategy. And next important characteristic which we need to mention, as I already wrote, innovation, guarantees innovation. And moreover, one point is it demands huge investment. If any organization believes in opting for expansion or growth strategy, they definitely require huge investment. Risks involved are high, but rewards are also high, full of promises and full of pitfalls. Are we good? Now, I have few points here which we already discussed, but still I will take you through under which reasons to adopt an expansion strategy. Environment demands full growth. Now, you need increased pace. You have to grow. I can't say I will stay like this. No, it's an environmental demand. Environment has changed. See, when IT returns are filed online, you can't say I will file IT returns manually. That's demand of the market, right? You don't have an option. You have to change. So expansion strategy can be chosen when it's demanded by environment and organization has to increase its pace of activity. Fast growth. Next, managerial motivation. What do you mean by managerial motivation? As a CEO or CFO, or maybe as a strategist, you will try to associate yourself with an organization which is into stability or with an organization which is into expansion. Where do you take pride? Obviously, you will feel like associating with an organization which is going for expansion strategy. So whether they are top level managers or you are a strategist, they always take pride in associating themselves to an organization which is into expansion strategy. Next comes market control. What do you mean by market control? Organization wants to gain good market position. They want to reduce the gap between themselves and their competitors. Then they can go for expansion strategy. Economies of scale means they want to increase their sales and profits. And we also wrote here, no, when organization wants to diversify. That's what I have here as well. When diversification is their concern, they want to diversify. What do you mean by diversification? We will discuss in a short span of time. You want to explore new markets, target new customers. You want to release new products. Then you can go for diverse. New geographical location. Suppose, like, say, for example, there is a luxury handbag company which makes handbags, travel bags, like that, luxury segment. But right now, they are only in European market. But suppose if they want to spread to Asian market as well, then that's called as expansion, right? So earlier they were there only in European market. Now they are spreading to Asian market. That is also definitely expansion, because they are trying to target a new geographical location. Right? Understood the concept? Now comes the bigger task. Have patience. You will learn all strategies in one chunk. I hope you don't get confused. If any queries, let me know. I will slow down. And if you are not understanding any concept, let me know. We will take enough examples so that you understand the concept crystal clear. So let's talk about the types of which strategy. Types of which strategy? Expansion strategy. So be clear with that. We are discussing the types of expansion or growth strategy. We have internal expansion, external expansion. Internal expansion comes again in two forms. What are they? Intensification, diversification. Okay. Now, what is this? Just take a look. Take a look at the flow chart. I'll hold back again. Intensification comes again in three types. What are they? Market penetration, development, product development. Second internal growth strategy is diversification. Diversification comes in how many types? Three types. What are the three types? Concentric. Wait. Concentric comes again in two types. Vertical, horizontal. Vertical again comes in two types. Forward, backward. Conglomerate diversification and innovation. That's all about strategy. That is it. So now just let me ask you, what are the two types of external growth strategies, so that you don't get confused under which segment it's placed. Types of expansion or growth strategies. Internal, under internal. We haven't yet moved to external. We are still with internal. Intensification types of strategies. Market development, product development. Diversification. Concentric, innovation. Concentric comes in two types. Vertical integration. Vertical integration again comes in two types. Forward integration, backward integration. Done. Let's take up one by one quickly and revise on key points, right? Because as you know, we do not have time to cover the entire, but I'm trying to do my best so that I take you through all the key concepts. This is must for your exam. Okay. Let's first talk about intensification, right? Under internal growth strategies, we have intensification and diversification. Let's focus on intensification. For understanding these three, I will finally give you a grid structure, but for the time being, let's talk about the three strategies of intensification. First one is market penetration. What do you mean by market penetration? Your focus is on existing product. You are not focusing on new customers. Your focus is on the same customer. And your focus is on existing product, existing customer, and in the existing market. And for market penetration, we are going to use the same channels of distribution. We are not willing to explore on any new distribution channels. Now, what is market penetration means? Where you try to make your customers buy more. So, you are trying to increase the frequency of usage and their quantity of usage so that they can buy more. Best example, now you all know Coca-Cola has launched a 2-liter bottle. How many times will I buy? 1-liter bottle, how many times I'll buy? So they have launched travel friendly 10 rupees packs. So your frequency of purchase has increased. So they want their customers to increase their frequency of usage and increase the quantity of usage. Because of which their focus is to promote their same products with same customers in the same market using same channels of distribution. Now let's talk about market development. What do you mean by market development? You are trying to expand geographically. What do you mean by expanding geographically? You try to target into new market. So you try to enter into new market. Market development means you try to enter into new market and where you try to expand geographically. For that, maybe lot of advertisements. What methods you can use means you need good advertisement and you need good promotion and good campaigns need to be run so that your market development goes successful. Same channels will work for them means no. They may have to use new channels. Are we good? Done? Now let's talk about product development. What do you mean by product development? There are two versions of understanding this. Either you are going to modify your existing product and make it a better version of the previous product, or you try to completely come up with a new product, which is much better than existing product with new features, new design, innovative product. So like that, product development means either you try to come up with new product or you try to modify the existing product and relaunch again. So this is what sometimes what happens is for few vaccines that have come or for few products, they keep changing the formula. They keep making the product better. So the same product gets improvised time and again, or they may completely come up with new product, but this new product will be related to the existing product. Are we good with this? Now, we'll take a good grid structure to understand these three to avoid any further confusion. Existing customer, new customer, right? On the other hand, we have existing market, new market. Will you try to fill the grid? Try filling it. Existing customers and existing market. What is that called as? You try to promote your products to your same customers in the same market using same channels. What is that called as? Market penetration. Are we clear till here? Now let's proceed to the next cell. Existing customer but in new market. Market development. New customer, existing market. I don't know, I'm asking you to fill the grade. If you are left, I will I will fill the last grade. New customers, new markets, completely, I can write this as diversification. Now you know where to fill the product development and market development. Tell me, I'll fill it up. I'm not sure. Let's erase. Where I should write market development? First here only. Here it's product development. Yes. Should I interchange? Yes or no? I'm literally confused. You have time. You have 20 more minutes or half an hour more. Keep thinking. Let's fill the grade. I'll come back to this again. New customers and existing market. Correct. Is it correct? Interchange? Not sure. Think. Think and give your final version before we conclude today's session. I'm keeping this on hold. If not today, you can come back and tell me tomorrow also. We are back with this. This lies like this in my notes. Think and get back. But I want you to interpret and tell me. I know you are confused. First two, no confusion. Confusion lies only between two. So you know what is intensification? So we have intensification coming in three types. What are they? Penetration, market development, product development. Interchange. Not sure. Should I interchange? Why hurry? Why go give some answer in a haste? You can have time to think and answer. So let's talk about the next. I'm keeping it on hold. Yes. Here, instead of customer, should I change with product? We'll do that also. I'll do that also. Don't worry. But still it would remain the same. Let's talk about, let's finish diversification. Now, what do you mean by, first of all, when it comes to diversification, understand one thing. Diversification is where organization tries to enter into new business. That might be related to the existing business or completely different from the existing business. So when you talk about diversification, diversification may happen in a related manner or diversification can happen in an unrelated manner. What do you mean by diversification which is in a related pattern? The new business what organization enters or the new products what they launch will be related to the existing business. Whereas if you talk about unrelated diversification is completely disjoint, different. You don't find any common thread between the new business and the existing business. So through diversification, what organization can do is, organization can go with new products, they can target new customer groups, they can use new channels, and they can also expand to new geographical locations, new products, new customer, new market, new channels. That's what is called as diversification. But as I said, diversification can be related or can be unrelated. What is related diversification? The new business is related to existing business. Like say for example, there is a shop which is right now selling only women clothing. They launch men's clothing as well. But it's related, right? Now they have only apparels being sold. Now they sell also fashion. They sell shoes. They sell some perfumes. So ultimately all are linked to the fashion industry only. So when the new business is related to the existing business, it's called a related diversification. Like say for example, let's take one more example which is totally unrelated diversification. You all know Mahindra Group, right? So all are aware of it. Mahindra is basically into what? Automobiles, right? But Mahindra has now entered into IT sector and started their own tech Mahindra, and they also entered into education, starting Mahindra University. So this is all. So do you find any relation between their new businesses? No. Now let's even talk about, just now we have seen in our today's session Tata Group exam, Tata and Sons, where we have given divisions. If you give Tata also, Tata Steel, Tata Automobiles, Tata Chemicals, Tata Power, is Tata IT Services, which is Tata Consultancy Services. So we have so many. This diversification is related or unrelated? You tell me now. Unrelated. Related diversification means, now Reliance started with trends where only apparels are sold. They also established Reliance Footprints where footwear is sold. It's related, right? Completely in the same industry. So when your new business is related to your existing business, it's related diversification. Completely different from the existing business, it's unrelated diversification. Are we clear? Now let's talk about the types of diversification. Now let's talk about concentric diversification. Concentric diversification is where your new business will be always related to your existing business. So now you tell me, concentric comes under related diversification or unrelated diversification? Related. Concentric diversification comes in two types: vertical, horizontal. Vertical integration means, you all know supply chain, right? If you have to talk about the supply chain, now let's give the stages of the supply chain. First we have supplier who delivers raw material, then it goes into manufacturing, then we have warehousing, then what? Distribution, and finally the shipment or logistics, and they are delivered directly to the concerned customer. Let's brief it up like this. All right. Now, in vertical integration, you are entering into a business which is in the same supply chain, but you don't have to be in the same stage. Now, suppose you are a person who is selling directly to customer and you want to enter into the business of the supplier. It is called as the backward integration. You are a supplier but want to enter into a business where you are directly dealing with customer. Retail business. So suppose you want to enter into a retail business and sell directly to the customer, then it is called as forward integration. Are we clear with this? So, but whether it is backward or it is forward integration, we are in the same supply chain. Okay, but not in same stage. Please remember these points. It's very important for you to understand the difference between vertical integration and horizontal integration. Are we good? Now, let's talk about few examples to understand vertical. See, to add value to your presentation, what I suggest you is, see, all right, what is vertical integration and what is forward, backward, but what adds value and where you can create a difference is wherever possible, try to give examples. Try to give examples and try to give your points in a tabular format that creates a lot of value in your presentation. Do not mind even if it's not lengthy, keep it crisp, but still write meaningful points which add sense and make sure you are adding examples. For all these examples, I feel are must. Now, like say for example, we all are aware of Reliance Fresh. We all know Reliance Fresh, where they sell vegetables, fruits, daily groceries to customers, but they are buying these vegetables and fruits from some farmers. They started thinking, why should I depend on some supplier? So they started buying their own farms. So they entered into the business of whom? Supplier. From their own farms, they are supplying vegetables to their own outlets. From their own farms, they are sending vegetables and fruits to their own outlets. This is called backward integration. Now, let's talk about Tata Steel. Now, you all know Tata Steel, like they make steel, it's well known, the reputation of India. And for this, what is required is they need iron, right? But they are depending on suppliers who are delivering iron to them. So what they have done, they have purchased their own iron ores. Now they purchase their own iron ores, and from these iron ores, they get iron to make steel in their own factories. What integration is this? Forward or backward? They are entering into the business of supplier. Wait, now let's talk about few examples which go for forward integration. We all know that Reliance is also again into refineries, petrol, right? We all are aware of Reliance petrol, Reliance refineries. Now, from their own refineries, now if you observe, they have their own outlets where they sell fuel directly to the consumer. That is forward integration. Let's talk about the well-known, again, the brand of India, which is Amul. Amul is known for making good dairy, milk, cheese, all dairy products, right? Now, Amul has established their own outlets to sell products directly to customers. What integration is this? Forward. So, whenever you are establishing or entering from being a supplier, so they're not just selling to some retailers. Now, rather than just giving to some retailers in the market, they have established outlets so that they can sell directly to customers. That is forward integration. So, forward integration and backward integration, how do they differ from each other? Backward integration is where from retail business you are entering into the business of supplier. Forward integration is where from being a supplier you are entering into the business of retail, where you can directly sell to customer. After examples, is it clear? Now we have one more concentric diversification, which is horizontal integration. We will have till 1:30, 1:30 will stop. Hope it's fine. We got delayed, no, today. What do you mean by horizontal integration? Horizontal integration also where your new business will be related to your existing business because it's a concentric diversification. So new business has to be related to existing business. Then what is the difference between vertical integration and horizontal integration? Means horizontal integration where you have to be in the same stage of supply chain. You have to be in the same stage of supply chain. Two suppliers can work together. Two retailers can work together. So if we don't ensure that you are in the different stages of the supply chain, both the businesses should be in the same stage of supply chain, then only it's called as horizontal integration. Okay. Now let's say there is a bank and it enters. Now you know, for insurance we don't have to step into insurance company. Both life insurance and non-life insurance, both services are offered by bank. Now you all know ICICI, right? It's basically known for consumer banking services and corporate banking services. But now they also entered into a new business, which is ICICI Prudential, which also provides banking services are given to customer, insurance services are given to customer. Both are in the related business and in the same stage of supply chain. This is the best example you can give for horizontal integration. So for horizontal integration, there are only two clauses you have to remember. The new business should be related to existing business and should be in the same stage of supply chain. But for vertical, you are in the same supply chain but can be at different stages. I hope we are clear with this. As we are done with concentric diversification, let's talk about conglomerate diversification. Conglomerate diversification is completely unrelated. It is an unrelated diversification. Ignore and my bad if I spell wrong at times. Spellings go wrong at times. So unrelated diversification, and it's totally disjoint. That means between your new business and your existing business, there is no commonality. No commonality at all. There is no commonality. There is no common thread of link. Customers may be different. Products are different. Markets are different. Their strategies are different. Completely different. The new business and existing business, you don't find any commonality. Best example you can give ITC. ITC, you all know, is known basically for tobacco, cigarettes. But then they were into making tobacco, but then they entered into ITC hotels, so-called major palaces in the country as part of heritage. They are taken over by ITC. And ITC is now also into agriculture. And ITC is also, as one of your friends said, FMCG. In the same one, let's take an example of Samsung. Samsung is basically known for electronics. Then they came up with mobile technology, which is at least related. But then they went into shipbuilding industry, which is totally unrelated. Whatever they were doing till now and what they are doing as a difference, there is no common thread of link. And what you should be knowing now is Samsung is also into construction. Is there any relation? So now that's how we define unrelated. So concentric is a related diversification. Conglomerate is an unrelated diversification. For today, the last concept I would like to brush up from here. I didn't forget this. We are still pending with this. Tomorrow I'm gonna write again, by the way. The last one we have here is innovation. Now, what is innovation? First of all, you need to understand is, again, innovation is also unbelievably modifying your product. So through innovation, we try to upgrade. So we may be upgrading the features of the product. We may be upgrading the design of the product, the services for the product. So we try to completely come up with we may completely come up with a new product. And this new product keep on modifying and upgrading, or completely you may launch a new product which is totally different from the existing one. Either ways, you are going to upgrade your technology also, the resources you are using, the features you are providing, the design you have for the product. This is called as innovation. Such innovation has its own benefits and its own limitations. Now, if you go on innovating, now let's get to the flowchart of innovation. Give me 1 second. Yeah. So what is innovation? We have covered. Now, what benefits innovation offers to a firm? What benefits is, first one, solve complex problems. See, there are some problems in the society which have been constantly chasing us. So for some problems like that, see, pollution. Constantly we are facing the problem of pollution. Adulterated products. Products which are also not very poor quality. Lot of chemicals being added in the product which are not so edible and good for human health. So like that, there are some problems in the society which have been constantly chasing us. And for such complex problems in the society, through innovation, we can give sustainable and customer-centric solutions. What do you mean by sustainable and customer-centric solutions? You are giving, like, best example, pollution. What is the solution we have come up with through innovation? EVs, electric vehicles. Yes. Now we find products are adulterated. We have come up with organic farming. This is not possible without innovation. Innovation requires lot of research and development. Without research and development, innovation is impossible. And it increases productivity. Productivity is where you can do more tasks in less time. Are you compromising on quality? No. More jobs done, more work handled in lesser time with great quality standards. That is what is productivity. So your quality is improving, costs are reducing, you are handling more work, time less, and lesser manpower. That is what is productivity. And how this productivity can be achieved, the only solution comes in the form of automation. Through automation, we have seen lot of benefits, right? First of all, we have reduced manpower, we have reduced costs, we have reduced time, we have reduced complexity, and we have also reduced lot of human errors. Yes, and because of all this, overall, what is the improvement we have seen is, we are not compromising anywhere on quality. Quality is continuously improving. You are doing more work with more quality, with less manpower, less cost, in less time, with less complexities and less errors. So that is nothing but improvement in quality. And this productivity can be achieved only with one solution, that is automation. I think you all better know innovation mostly happens in one field all the time, that is IT sector. Changes keep happening. New technology, obsolete and old technology replaces. New technology replaces the old one. Next comes provide competitive advantage. I don't think I need to explain this. If any organization believes in innovation, the first benefit they see is they are always superior to their competitors. They can perform and provide better services to customers more than their competitors. But now come talking about, see, we have seen let's see the other side of the coin. Is innovation showing you all benefits means? No. Innovation comes at huge cost. It's very, very expensive. And why so much expensive? Your employees have to be well trained. Without trained employees, innovation fails. Innovation requires lot of adaptability. Many times, I'm sure many of you haven't seen the era when banks have gone for automation. That was lot of protest from employees for months together, because they believed because of this automation their jobs are lost, and they believe their work has been done by somebody. But still, did automation stop? It has happened, right? So, but still, innovation requires lot of adaptability. Your employees must be trained, and it requires huge cost. And as I said, innovation requires lot of research and development, which is not going to be a cost friendly aspect. Research and development involves huge and huge costs. But despite spending that much, many times you may feel innovation was not useful. You may lose your objectives, and it's quite complex. So that's how we discuss about internal growth strategies. We have external growth strategies we will cover tomorrow. As you can see, mergers and acquisitions, and we have strategic alliance. We are done with time for today. Let's conclude our session here today, and tomorrow we will continue. Let's see, we will cover selective concepts tomorrow from various chapters. Yeah, thank you so much. Answer? Chapal kada? You have to tell me.